So today, as per our last discussion in the last lecture, we are supposed to finish many things today. Small things are there, but we are supposed to finish many things. So the first thing which we are going to do will be 10AA. Okay. So let's go to 10AA. See. If the assessee is any person he has to commence operations of manufacturing or producing, manufacture or production of any article or thing, yes or no? Or he has to commence operations of providing services. Now these operations needs to be performed. These operations must be commenced in special economic zone. So this section says that you have to start doing any business where in SEZ, special economic zone. You must have heard about SEZs. Okay, so you have to start manufacturing business or start providing services from SEZ, and the period during which you have to start this business is previous year 5-6 to previous year 1920. So the deduction which we are talking about, the deduction is 10AA. This is applicable only if you are this type of assessee who has started the operations of manufacturing or providing services from SEZ, and these operations must be commenced between this period only, previous year 5-6 to previous year 1920, meaning 1st April 2005 to 31st March 2020. Between this period, any time you start your business, manufacturing business or providing your services, start providing services from SEZ. So this SEZ business, from this SEZ business, whatever export profits you will earn, export profits of year 1 to year 5, 100% of those export profits will be allowed as a deduction. So for the first 5 years, whatever export profits you will earn, because see, from SEZ, no, usually the assessees who are doing business from SEZ, they are manufacturing and they are exporting those manufactured goods. Whenever you are providing some services from SEZ, those services are exported only. You are exporting your services outside India and you are earning valuable foreign currency. So the government is giving you some benefit in terms of 10AA. You are bringing a valuable foreign currency to India, so your business should be promoted. You should be given some benefits. So if you are given benefits, you will be motivated to earn more foreign currency for India. Yes or no? So the year 1 to year 5, whatever export profits are there, because see, from this business, whatever profits will be there, whatever turnover will be there, majority of the turnover and the profit will belong to export sales only, export profits only. Yes or no? very minimum amount, very minimal turnover will be domestic turnover, and very minimal profit will be related to that domestic turnover. Yes or no? So whatever profits which are there, out of that entire profits, majority of the profits will be export profits only. 100% of your export profits for the first 5 years we are going to allow you as a deduction under 10AA. Now from year 6 to year 10, whatever export profits will be there, 50% of those export profits will be allowed as a deduction. And from year number 11 to year number 15, 50% again of your export profits, provided this 50% is transferred to special economic zone reinvestment reserve. Government does not want you to take the benefit of this section and go away after 10 years. So government wants you to stay here only. And now after 10 years you will stay here and you will expand your capacity. Meaning you are manufacturing, no? So for the expansion, do one thing. From 11th year, if you want to take this deduction from 11th year, whatever export profits will be there, 50% of that we are going to allow. But those 50% you have to first transfer to a special, reserve account. That special reserve account is known as SEZ reinvestment reserve. Reinvestment means whatever profits, export profit 50% amount, whatever amount you have transferred to these reserves. Now these reserves will be reinvested again in your business. The amount transferred to this reserve will be reinvested in your business. How? You will have to buy plant and machinery. You will have to, reinvest the same amount in your business in different ways. So that your capacity expands. So that your business, here only, your business grows. And after completing 50 years, you are unable to move out. Because you have done so much of expansion over here only, that you cannot now move out. Now just imagine after 15 years will be over. From 16th year onwards, you are going to earn huge amount of money. For the first 5 years, there will be very minimal export profits as compared to the second 5 years. So first 5 years take 100% because that will not be a big amount. See, our government is very smart. They should have given more deduction in the later on years, because the moment you will start your business in the initial years, you will not be earning huge profits. Yes or no? Your turnover will be very less because it is your new business which you have started here. Okay, so your turnover will be very less, your profits will be very less. So it is better to give 100% in the beginning only. And in the beginning, if we will give you 100% what? Deduction under 10AA, you will be motivated. Okay. But from 6th year onwards, slowly and gradually your turnover will start growing. And your profits will also start growing. So instead of giving you 100% exemption, 100% deduction for the next 5 years, we will give you only 50%. Now after taking this 50%, you don't go away. You stay here only. So for the next 5 years, meaning year number 11 to year number 15, whatever export profits will happen, 50% of those export profits will allow as a deduction under 10AA. But to get this, you will have to transfer the amount, transfer that 50% of export profits into SEZ reinvestment reserve. And you will have to use that money in a way in which the government will tell you to spend. So in most of the cases, it is told that you have to reinvest that amount in the new plant and machinery. You should expand your capacity in the SEZ itself. So by the end of 15 years now, you have 50% of profits starting from year 11 to year 15. 50% of your export profits if you have reinvested. Just imagine how much capacity will grow. How much big your unit will become now. How much big your business will become in your SEZ. Now even if you want, 16th year you cannot move out, leaving all these things behind. Getting my point? So from 16th year onwards, now just imagine how much profits you are going to earn. Huge. and that the government is not going to exempt. From 16th year onward, your entire profits, including export profits, domestic profits, entire profits will be charged to tax under the head PGBP. So government gave you this 15 years cushion, 15 years comfort, known as tax holiday period. Earn and don't pay tax. For the first 5 years, 100%. Next 5 years, 50%. Last 5 years, 50%. But last 5 years profits needs to be reinvested. Yes or no? So this is 10AA. Now the main thing, that how to calculate this export profits. Very simple. See, you will get total turnover. The business which you are running in SEZ, this manufacturing business or this business, okay, no, which you are running in SEZ, this business will have some total turnover, and out of that turnover, total profits will be there. Now can I say this total turnover will include two type of turnover? One, your export turnover will also be there. In this total turnover, there will be majority of the turnover which will be your export turnover, export sales, yes or no? And very minimal amount will be your DTA turnover. DTA means domestic tariff area, okay, no, we call it DTA, and what is the full form? Domestic tariff area. So whatever sales from this SEZ unit, from this SEZ business you have made, out of that sales, some sales will be very, limited sales will be in the domestic area, but the majority of the sales will be export sales, export turnover. Now from this turnover, if you are earning this profit, can I say in this profit, some profit will relate to your export turnover and some profit will relate to your domestic turnover? So you have to split your profits also into same proportion. In the proportion in which the turnover is split, in that same proportion you have to split your profit. If out of 100 rupees of turnover, 80 rupees is export and 20 rupees is what? Domestic turnover. So 80% of the turnover is what? Export. 20% of the turnover is what? Domestic. So out of your profits also, 80% will be export profit, okay, and this export profit will be nothing but total profit into export turnover divided by total turnover. Export turnover divided by total turnover is the proportion of export turnover to total turnover. That proportion you apply to the total profits, you are going to get what? Export profits, okay, no, and the balancing profit will be DTA profits. Now see, these DTA profits, the profit which relates to your domestic sales, that will be entirely taxable. But this export profit, no, you are supposed to calculate this export profit for all the years. Year 1 to year 5, you will calculate your export profit like this every year. And 100% of your this export profit will be exempt. Getting my point, sir? Hello, sir? And year 6 to year 10, again you are going to calculate the export profit like this. But whatever export profit you will calculate, 50% of that. Balance 50% export profit taxable, and the domestic profit of that year will also be taxable. Yes or no? Did you understand? This was your 10AA. But this deduction was available only if you had started doing business from 5/6 to 1920. Meaning that the assessees who have already established their manufacturing units and service units in SEZ from this period, currently also they are getting the deduction under 10AA. For example, someone would have established in previous year 13-14. So Krishna, he has set up the manufacturing unit in 13-14 in SEZ. So since 13-14, he is doing business in SEZ. 13-14, 14-15, 15-16, 16-17 and 17-18. These 5 years he has already taken 100%. 13-14, 14-15, 15-16, 16-17, 17-18. Then 18-19, 19-20, 20-21, 21-22, 22-23. He has already claimed 50%. Then 23-24 and 24-25. Can I say this is the 12th year? So 12th year business. Export profit will be there. 50% of this will be exempt under 10AA. It will be allowed as a deduction. Hello sir, but wait, provided that 50% is transferring to SEZ reinvestment reserve. Now for example, I started in 2017-18. In 2017-18 I started my business in SEZ, manufacturing business. So 17-18 was my first year. 17-18, 18-19, 19-20, 20-21 and 21-22. Till 21-22 I have already claimed 100% of my export profits. Then 22-23, 23-24 and 24-25. My previous year 24-25 is the 8th year of my operation in this business. Yes or no? So 8th year, whatever export profit which I will have now in this year, this is the export profit of 8th year. Yes or no? How much? 50% of this year's export profit will be allowed to me under 10AA. But remember one thing, 10AA, this deduction which you are claiming will be allowed only if you don't follow 115 BSc. Meaning if you are following 115 BSc, 10AA will not be allowed. Okay sir, should I move ahead? See, it was supposed to be given for a limited period of time. Now all the SEZs are already occupied. Okay, now there is no space left for people to come there and start doing business. SEZs are what? They are specific locations which are identified and notified as what? These areas are special economic zones. Okay, now in those areas already the many business houses or many assessees have already started their business. So the government wanted to promote it for a limited period. So it promoted also, gave the benefits. Many people came and they started their business from SEZs. Okay, so now the government does not have any intention to grant this benefit further. Okay, hence it was discontinued from 1920. Discontinued means now even if you start doing your business from SEZ, even if you start your operations in SEZ, you are not going to get any deduction under 10AA. For example, I started my business in SEZ. I started my manufacturing business in SEZ last year only, 23-24. Will I get the deduction under 10AA? No. I should have started my operations in 1920. Last 1920. Yes or no? So now, can we solve the questions? We are ready? Okay. Let's do illustration number 21. Come to your deductions chapter. Deductions chapter. In your deductions chapter, there is illustration number 21. Okay. This illustration number 21 is based on 10AA. Okay. See, Mr. Y furnishes you the following information for the year ended 31st March 2025. Total turnover is given of unit A, which is located in SEZ. This is the total turnover, 100 lakhs. Now profit of unit A is given. Are they telling you that this is export profit, domestic profit? No. So this is the total profit of unit A. Okay. Next one, out of the total turnover, how much is the export turnover? How much is the export turnover? It is given. Export turnover of unit A, and which is received in India in convertible foreign exchange on or before 30th September 2025. No problem. We just have to see that how much is the export profit. That's it. Okay, no? How much is the export turnover? Now export turnover out of 100. Out of 100, 50 is export turnover. So can I say out of 30, out of 30, 15 will be your export profit. Sir, how did you get it? Out of 100, half is export. So out of total profit, half will be export profit only, no? Common sense. But we'll apply a small formula so that they don't feel that we have not done anything. Okay, no? So we'll apply the formula also, don't worry. Total turnover of unit B, which is located in domestic tariff area. This is not his SEZ business. This is a business located in normal area, domestic area. Okay. The total profit of unit B is 20. Compute the deduction under section 10AA for the assessment year 25-26, assuming that Mr. Y commenced operations in SEZ and DTA in the year 1920. So both the businesses were started in which year? 1920. The operations of both the business started in 1920. So 1920 was the first year. 1920, 2021, 21-22, 22-23 and 23-24. 5 years have already gone. This 24-25 will be the 6th year for both these businesses. Yes or no? Now can I say, if I have to present the answer, I will be presenting it like this. What is the name of assessee? Mr. Y, no? Mr. Y is doing two businesses. One is unit A, that is in SEZ. Another one is unit B, that is in DTA, domestic tariff area. Unit A business, total turnover 100 lakhs. Total profit is equal to, wait, total turnover is this, export turnover. Is equal to 50 lakhs. And total profits is 30 lakhs, right now? Now for unit B. Unit B, I'll write the same thing. But there will not be any export profits. Total turnover, total profits. Total turnover was 200 lakhs. And total profits were 20 lakhs. Okay. Now see, can I say that this entire total profit of unit B will be what? Taxable under the head PGBP, because nothing out of this will be exempt. no deduction, no exemption. Entire profits will be taxable. Now out of the profits of unit A, can I say the details are given for previous year 24-25. So this is 6th year operation. Sixth year of operations. Out of this 30 lakhs, how much will be export profits? That I have to first calculate. Then my DTA profits will be there. Sir, export profits will be 30 into 50 upon 100 is equal to 15 lakhs. Okay. And DTA profits will be balancing figure. Balancing figure 15 lakhs. Yes or no? Without any doubt, this 15 lakhs will be taxable under the head PGBP. There is no doubt about it. Yes or no, sir? Because that is DTA profits. Now let us talk about this export profit. Export profit is 15 lakhs. Don't you think that this 15 lakhs export profits are export profits for which year? 6th year, no? So for the 6th year, these are my export profits, 15 lakhs. So for 6th year, 50% of my export profits amounting to 7.5 lakhs will be allowed as a deduction under section 10AA. So the deduction will be this 50%. Done, sir? Now, what about the balance 50% of export profits? So balance 50% of export profits, 7.5 lakhs, I cannot exempt them. Why, sir? Because only 50% is exempt, only 50% is allowed as a deduction. This will be taxable. Now, do you have the taxable amount? Do you have the taxable amount? This 15, this 20 and this 7.5. Color, pink color. So if they tell you in the same question, they tell you the total deduction under section 10AA. So your answer will be 7,50,000 and the taxable profits for this year will be 20 lakh plus 15 lakhs. It will be 35 lakhs. Okay. And then 7.5 lakhs will be 35 plus 7.5 will be 42.5 lakhs. Okay. So 42 lakh 50,000. Meaning that in this year, no, you have earned a total profit of 50 lakhs. 20 lakhs from your domestic business and 30 lakhs from SEZ business. Getting my point? So out of the 20 lakhs, nothing will be exempt. Entire 20 lakh will be taxable. Out of the 30 lakh, entire 15 lakh of export profit will not be exempt. 50% of the export profit will be exempt. Only 7.5 lakhs. Okay. And the balance 50% of export profit and balance DTA profits of SEZ units will be taxable only. Done, sir? So from this question, they can ask you these two things. You have to remember, huh? You have to remember, they can ask you that what is the amount of deduction available? That also they can ask you. And what is the taxable profits, that also they can ask you. Okay, so will you be able to calculate like this? 2 marks MCQs done. Or even if this question is asked for 4 marks, you are able to get the full 4 marks by doing just this thing only. Done, sir? Should we move on to the next question? Okay. So now we are solving question number 12, which is given in your computation of total income topic. Right now, test your knowledge. Question number 12. Mr. X, an individual, set up a unit in SEZ in the financial year 1920 for production of washing machines. Very good. So he started manufacturing business, manufacturing of washing machines from a unit in SEZ. The unit fulfills all the conditions of section 10AA. During the financial year 23-24, he has also set up a warehousing facility. During the year 23-24, he has set up a warehousing facility in the district of Tamil Nadu for storage of agricultural produce. Do you remember warehousing of agricultural produce is 35 AD, specified business. So this is his specified business. And unit in SEZ, this is his SEZ business. How many businesses he has? 2 businesses. One business in SEZ, another business in normal area, specified business. Okay. It fulfills all the conditions of section 35 AD. Capital expenditure in respect of the warehouse amounted to rupees 75 lakhs, including cost of land 10 lakh rupees. The warehouse became operational. Warehouse became operational with effect from 1st April 2024, meaning the operations of the specified business you have started in this year only. It was set up in the last year, but you started the operations from this year. So this is the first year of your warehousing business. Yes or no? And expenditure of 75 lakhs was capitalized in the books as on that date, meaning that 75 lakhs was a pre-commencement capital expenditure on your specified business, including 10 lakh rupees of cost of land. Okay, no? So any pre-commencement capital expenditure on your specified business is also allowed as a deduction in the year in which the business is commenced, provided it is capitalized in the books. So this is the first year, 24-25 is the first year. In this year, the pre-commencement capital expenditure will be allowed as a deduction in this year because it was capitalized in the books. But the entire capital expenditure cannot be claimed. Only 65 lakhs will be allowed because out of 75 lakh, 10 lakh was the cost of land. Okay, no, that cannot be claimed as a deduction under 35 AD. Now, relevant details for the financial year 24-25. Profit of unit located in SEZ, that is 40 lakhs. This is the total profits. Export turnover received in India in convertible foreign exchange, that is 80 lakhs. Domestic sales of the above unit is 20 lakhs. So can I say 100 lakhs is the total sale? On that 100 only 40 lakh is the profit. Okay. Now profit from operations of warehousing facility before considering deduction under section 35 AD, that is 1 crore 5 lakhs. Now you are supposed to compute income tax including AMT. Forget about that AMT right now. Okay, right now forget about the AMT. Including AMT under section 115 JC, income tax liability of Mr. X for the assessment year 25-26, both as per section 115 BSE and as per regular provisions of the Income Tax Act. Advise Mr. X whether he should pay tax under the default tax regime or normal provisions of the Act. Now first you will have to calculate the profits as per normal provisions. Calculate the tax on that. Then again you are supposed to calculate the profits as per 115 BSE, calculate the tax on that, and then you'll have to advise that what Mr. X should do. Okay, now what Mr. X should do. Now please pay attention. See, from this question only there is a concept which is coming out, the concept of alternate minimum tax. Okay, so till the time you don't know that concept, you will not be able to calculate the income under the normal provisions. You will be able to calculate income as per 115 BSE. There will be no problem. Why? Because when 115 BSE is applicable, AMT provisions do not apply. When 115 BSE gets applied, no, AMT is not applicable. But if you shift out of 115 BSE and you follow normal provisions, that time provisions of alternate minimum tax, AMT provisions are also applicable. So in this question, what you are supposed to do, if you don't follow 115 BSE, then you will have to calculate regular total income and regular tax liability also, and along with that you'll have to calculate adjusted total income and AMT liability also. Both are applied. But if you don't follow 115 BSE, only then you are supposed to do that. But when you follow 115 BSE, that time you are supposed to calculate your regular total income and regular tax, and this tax will be as per 115 BSE rates. Okay, and here whatever tax you are going to calculate will be as per, this will be as per normal rates. Okay, no, normal rates which we have. So now what is your alternate minimum tax? What alternate minimum tax provision has to say, that we have to learn. Then only we are able to calculate the first part, and then only we can give the advice that what is to be done, what is not to be done. Getting my point? So now see, I will tell you about the AMT provisions. Okay, no, AMT provisions are from 115 JC to 115 JF. So the provisions of AMT are from 115 JC to 115 JF. These are the AMT provisions. Now there are different things that when the AMT will be applicable. If the AMT provisions are applicable, then who will be liable to pay AMT? AMT liability, when that liability will arise, what will be the rate, how adjusted total income will be calculated, what will be the rate of alternate minimum tax. Okay, no? Now everything we are going to discuss. What will be the AMT credit, how that AMT credit will be calculated. So first we'll learn this AMT provisions, then again we'll come back to this question. Everyone, sure? Now pay attention. See, there is one section 115 JEE, subsection 1 talks that any person but other than company. So for the companies, AMT provisions are not applicable. Why? Because for companies, MAT provisions are applicable. AMT not applicable, MAT applicable. MAT, minimum alternate tax. So if the company is already made liable to pay minimum alternate tax, Hence, the companies are not made liable to pay alternate minimum tax. Yes or no? This alternate minimum tax provisions are applicable to all the assessees, all the types of persons other than a company. So you are any person but other than a company. You can be an individual also, you can be HUF also, you can be AOP, BOI, firm, LLP, you can be any person. And such person has claimed deduction under section 80 IA to 80 RRB except ATP, or he has claimed deduction under section 10 AA, or he has claimed deduction under section 35 AD. If the assessee has claimed any of these deductions while computing total income. So, if you are an assessee other than a company and during the previous year you are eligible to get any of these deductions, and while calculating your total income you have claimed any of these deductions, yes or no, then for you the AMT provisions will be applicable. Meaning 115 JEE subsection 1 talks about applicability of AMT provisions. Applicability of AMT provisions. Okay, now pay attention. Here they are saying that as per section 115 JEE subsection 2, AMT provisions shall not be applicable to an assessee who is individual, HUF, AOP and BOI, or AJP who has claimed the deductions under section 80 IA to 80 RRB except ATP or 10 AA or 35 AD while computing total income. So if this is the assessee and he has claimed any of these deductions, but the total income does not exceed 20 lakhs. So there is a limit on total income is given. See, all the assessees are are liable to calculate their for all the assessees the AMT provisions will apply. To individual HUF, AOP, BOI and AJP also it will apply, provided they have to claim any of these deductions. Which deductions I said? 80 IA to RRB or 10 AA or 35 AD. So for them also the provisions will be applicable, but for the purpose of applicability their total income should be more than 20 lakhs. After claiming these deductions, if their total income is more than 20 lakhs, no, then only for these assessees the AMT provisions will be applicable. What if you are an individual HUF, AOP, BY, AJP? Okay, no, I am writing about these assessees. You are individual HUF, AOP and BY or AJP. These three deductions which are mentioned above, yes or no? These three deductions. You have not claimed only. You have not claimed these three deductions only. Then whatever is your total income, any amount, AMT provisions will not be applicable for you because you have not claimed these three deductions only. Hello sir. In order to apply AMT provisions, it is necessary that any of these three deductions you have claimed while calculating your total income. Have you claimed any of these three deductions? No. Then whatever is your total income, whatever amount of your total income you are having, AMT provisions will not apply. But if while calculating your total income, you have claimed any of these three deductions and your total income does not exceed 20 lakhs, still the AMT provisions will not be applicable, even if you have claimed any of these three deductions. Getting my point? But if you have claimed any of these three deductions and even after claiming these three deductions, your total income is more than 20 lakhs, that means you are not a small assessee, you are a big assessee. Such a heavy deductions you are claiming, and even after claiming such heavy deductions, your total income is huge, more than 20 lakhs. So for you, AMT provisions will be applicable. So for individuals HUF, AOP, BY and AJP, the applicability of AMT provisions will happen only in this case. Getting my point? But for any other person, not being a company definitely we have to exclude. Now which persons will be covered? Tell me. Local authorities, firms, LLPs, they will be covered here, no? If they have not claimed any of these three deductions, whatever may be the amount of their total income, AMT provisions are not applicable for them. Why not applicable? Because they have not claimed any of these three deductions while calculating their total income. But while calculating their total income, if they have claimed any of these three deductions, then friends, any amount of total income is there, whether the total income is less than equal to 20 lakhs, 20 lakhs, more than 20 lakhs, in all the cases the AMT provisions will apply. So for them, for these type of persons, applicability of AMT provision will happen only in this case. Yes or no? So did you know that when the provisions will apply? Now what these provisions are telling you? Now after looking at 115 JEE1 and JEE2, we came to know that AMT provisions are getting applicable. Are you covered by AMT provisions? Yes. Now what is happening? That when you calculate your regular total income and on that you are calculating your regular tax by applying normal rates. Okay, no? Because see, 115 BSE rates if you are applying, meaning you are covered by 115 BSE. Yes or no? You are not shifting out. You are covered in default tax regime. Then definitely AMT provisions are not applicable only for you. Under 115 BSE, calculate simply your total income and simply calculate your tax liability as per 115 BSE. That's it. No need to calculate alternate minimum tax, because alternate minimum tax provisions are not applicable if you follow 115 BSE. Yes, sir? But if you don't follow 115 BSE, will you calculate your regular total income? Yes. While calculating your regular total income, you would have taken any of these three deductions? Yes. And after claiming these deductions, whatever may be your total income, AMT provisions will be applicable. But if you are individual HUF, AOP, BOI and AJP, after claiming these deductions, your total income should be more than 20 lakhs. Total income more than 20 lakhs. And on that, whatever tax you are calculating as per normal, by applying the normal tax rates, if the tax calculated by you is less than 18.5% of adjusted total income, this is known as alternate minimum tax. This is known as alternate minimum tax. What is the rate of alternate minimum tax? 18.5%. That rate you are supposed to apply on adjusted total income. By applying this 18.5% on adjusted total income, whatever amount you are getting, that amount is your alternate minimum tax. Now, if your alternate minimum tax is less than the regular tax which is calculated, in that scenario, if this condition is fulfilled, okay, no? This condition is fulfilled, then section 115 JD subsection 1 says that adjusted total income shall be deemed to be the total income for the assessee. Now your total income which you have calculated, no, regular total income, that will be ignored. Now this adjusted total income will be deemed to be your total income, and alternate minimum tax shall be deemed to be the income tax payable, income tax liability. So now your income tax liability, which was regular tax, even that will be ignored. Your regular total income will be ignored. Your regular tax which you have calculated will be ignored. Adjusted total income will be deemed to be your total income, and the AMT which you have calculated, that AMT which you have calculated will be paid by you as your income tax liability. This is 115 JD subsection 1, which talks about obligation or liability to pay alternate minimum tax. If this condition is fulfilled, pay this amount as your income tax. If this condition is not fulfilled, calculate your regular total income, calculate the regular tax, pay that regular tax. Meaning that if the regular tax was higher than alternate minimum tax, we will take the regular tax only. But if the regular tax is coming less, then we are going to collect how much income tax from you? Income tax equal to the amount of alternate minimum tax. This much minimum tax we want from you. We cannot accept a tax amount lower than this from you, because we have to run the country, boss. To run the country, people like you, just imagine, you would be claiming the deduction under 35AD, huge deduction. You would be claiming 10 AA deduction. You would be claiming 80 IA to 80 RRB. See, from 80 IA to 80 RRB, whatever deductions are there, no, those deductions are not there in your CA intermediate syllabus. Those you are going to study in final. But out of these deductions, 3 deductions you have already done. 80 JJAA you have done, 80 QQB you have done, and 80 RRB you have done. So still 80 IA to 80 RRB, 3 deductions you have claimed. But they are not talking about only these three deductions. 80IA to 80 RRB, any deduction. Now these deductions are profit based, income based deductions. If you earn certain type of incomes, certain type of profits, these deductions are allowed. Doing specified businesses, from those businesses certain profits are earned. 100% of those profits for some years are allowed as a deduction. Every year earn these type of profits and every year take the deduction of these type of profits. Yes or no? Every year earn this type of income and take the deduction of these type of incomes. So what they are trying to do, that they are trying to give you benefit. Okay. But after taking such huge benefits, no, your total income remaining will be very, 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 very less. Because these deductions are not small deductions. These are big deductions. Amount allowed as per these sections is higher, huge. And just imagine if you are claiming such huge deductions, no matter whatever amount of profit remaining in your hands, you are not going to pay tax on the entire profits. You are going to pay tax at a very lower profit. Just imagine, no, in this question which we solved, how much profit you earned? You earned 50 lakhs. See, 30 lakhs from your this business, SEZ business, you are earning 30 lakhs. And here you are earning 20 lakhs. But on how much profit you are paying tax? Are you going to pay tax on the entire profits? No, you are going to pay tax only on 42.5 lakhs. 7,50,000 still earned by you as a profit will be there in your hands. But are you paying tax on your entire profits? No, you are going to pay tax only out of 50 lakhs, only on 42.5 lakhs you are paying tax. Just imagine this was the 6th year. For example, if it was your first year, second year, 5th year, then the entire export profits 30 lakhs, 15 lakhs. Out of 30, 15 lakhs, entire export profits would have been exempted, would have been allowed as a deduction. And only the DTA profits of 15 lakhs and that 20, only 35 lakhs would have been taxed in your hands. Earning 50 lakh profits but paying tax only on 35 lakhs. So this is the magic of these sections. You are earning huge profits, but out of those entire profits, you are paying very less tax on very less profits. And as a result of that, a person who is earning huge profits is not paying tax on the entire profits. Majority of the profits are allowed as a deduction and only a small portion of profits is remaining in your hands for the purpose of taxability. See, actually, you are not having this much amount in your hands. You are having more amount in your hands. But you are paying tax on a very less amount because these deductions were available. So government is saying that, okay, you are taking these deductions. As a result of these deductions, we are only allowing you these deductions. As a result of these deductions, your profits are coming drastically down. Your total income will come drastically down. So therefore, the profits which you are going to calculate will be very less. As a result of that, your regular total income will come very less. And on that, whatever tax you are going to calculate will be very less amount of tax. Now, from a person like you, who is having huge profits, if you are taking this much tax only, the normal people of India are cursing the government that you are, rich friendly government. You are giving them more benefits. You are extracting taxes from us, but not extracting taxes from the people who are earning more. They are becoming rich day by day. Getting my point? So please, please. See, if you are having this much regular total income and this much regular tax, if this tax is lower than this amount, no, we will not accept this tax, no. At least pay this much amount of tax to the government. At least pay this much. Now see, government has a different intention. Okay, government is saying, whatever the government is saying, that is correct. If you are paying tax, peanuts as a tax, very less amount as a tax, then how the government is going to run the country? Because the majority of the profit are earned by people like you only. Majority of the incomes in India are earned by you people only. And you all will not pay the income tax. then how do we run the country? We cannot ask for taxes from middle class, lower middle class and poor people. No, they don't have this much income which you all have. Still, whatever we can extract from them, we are extracting. But you should also be responsible to pay a minimum amount of tax. No, we have to run the country and we have to show ourselves good in the eyes of other public also, general public also, that see, we are not rich friendly government. So the government, whatever the government is doing is correct only. But see, you will tell the government that government, why do we pay you extra tax? The deductions, we never came to ask for the deductions. Your law only made the provisions. You only made the provisions in the law. And as per the law, if we are getting the deduction and our total income is coming less, and as a result of that our tax is coming less, so we should be paying this much tax only. No, if you want to extract a minimum amount from us, then stop giving these deductions. Why are you giving all these deductions? At the very first instance, you should not give these kind of deductions only. Then you are fooling us. At one hand, you are telling that, okay, take this deduction, take this deduction, take this deduction, you will get benefit. And now that we have taken the benefits, you were knowing, no, that after taking this much huge benefit, our profits will be less, our total income will be less. This was known to you from the very beginning only. Then why are you again putting us in a trouble to pay this much amount of minimum tax? This is something bad which you are doing with us. And even these people are correct. They are logical. So the government is saying, see, don't worry. This tax which you are supposed to pay now is already paid in the alternate minimum tax. If we are going to take a minimum amount of tax, say for example, this tax was 100 and if this is 250. So we are not telling you to pay 100, we are telling you to pay 250. Meaning that 100 is already paid. And 150 rupees extra which you will pay in the form of alternate minimum tax, no, that we are going to give you as a credit, AMT credit, which will be carried forward for 15 years. In the next 15 years, whenever you are liable to pay the regular tax liability, no, what did I say? Whenever you are liable to pay regular tax liability, from that regular tax liability, take the credit of this AMT. That time, regular tax liability you reduce by the amount of this AMT, because this much amount of extra tax you have already paid right now. Okay. So this much tax we are not going to collect in the form of regular tax. Getting my point, everyone? Hello? So the government is making sure that at least this much amount is received by these people. From these people. Okay, no? So 115 JD subsection 1 says that when there is a liability, see, once the AMT provisions are applicable, okay, you have to first check the applicability. Once the AMT provisions are made applicable, then you are now liable to pay AMT. And AMT will be how much? 18.5% of your adjusted total income. If that AMT amount is more than the tax which you have calculated on a regular basis. Yes or no? So your total income will be ignored, your regular tax will be ignored, adjusted total income will become your total income, and the AMT which you have calculated will become your income tax liability that you are going to pay. Okay, but now to calculate this 18.5%, this AMT amount, this 18.5% you have to apply on adjusted total income. What is the meaning of adjusted total income? See, the total income which you have calculated, no, regular turnover, no, it is regular total income, okay, regular total income. So the regular total income which you have calculated, this you have calculated by taking those deductions. What if we were not allowing you those deductions? Then this amount would have been higher. So after taking 10 AA, you have calculated total income. After claiming 35 AD, you have calculated your total income. After claiming 80 IA to 80 RRB, you have claimed this calculated this total income. Do one thing, those deductions which you have claimed now to calculate this total income, add all the three deductions. But wait, 35 AD, the deduction was available for capital expenditure incurred on asset. So any asset acquired for specified business, the entire cost of that asset was allowed under section 35 AD. So if we are telling you to add that 35 AD deduction, meaning that we are not allowing that cost. Okay, no. For example, we are not allowing that cost under section 35 AD. So we are telling you to add back that cost. The deduction which you have claimed under section 35 AD, add back that deduction 35 AD. Meaning the cost is not allowed. But definitely, if the cost is not allowed, that out of that cost, some amount would have been allowed in this year in the form of depreciation, no? Reduce that depreciation amount. Depreciation on the amount of capital expenditure which was allowed under section 35 AD, which you are now adding back. Getting my point? So do one thing. Take your total income. So the total income which you have calculated on a regular basis. Hello? Take your total income. Now this total income will be after claiming all those deductions. Yes or no? In this add the deduction which you have claimed under section 80 IA to 80 RRB except ATP, then 10 AA and then 35 AD. But remember, reduce the depreciation on actual cost which was allowed under section 35 AD. On this amount only calculate the depreciation. Yes or no? The amount which you are adding back, on that amount calculate depreciation for this year and claim that depreciation. Now the total income which you have calculated, these three deductions which you had claimed, you are adding back, and the depreciation on the 35 AD component. You do add or less. Have you adjusted your total income? This is nothing but the adjustment happening in your total income. So after doing these adjustments, whatever amount will be there, that will be your adjusted total income. This you have to calculate. This is given under section 115 JD subsection 2. Subsection 2 says that how to calculate your adjusted total income. Okay, sir. Now 18.5% you are supposed to apply on this amount. That rate of AMT 18.5% you are supposed to apply on this amount. And how this amount will be calculated? It is given in 115 JD subsection 2. That if you become liable to pay, when are you becoming liable? Liability you will be able to calculate only if you are able to calculate 115 JD2, meaning adjusted total income. So calculate adjusted total income, apply 18.5%, you will get AMT. That AMT amount is higher than the amount of regular tax. Then ignore regular tax, ignore the regular total income, adjusted total income will be deemed to be your total income, and the AMT will be your income tax liability. That's it. Sure, sir? Now pay attention. Pay attention. A report from a chartered accountant must be prepared stating all the calculations, certifying all the calculations which you have made, the total income calculated by you, the deductions claimed by you under 10 AA, 35 AD, yes or no? So your CA will make a report. If 115 JD, meaning that 115 JD to 115 JF, the AMT provisions are made applicable to you and you are liable to pay what? AMT, no? So now your CA will issue a report. In that report, all the reporting related to alternate minimum tax will be done. That what was your total income which was calculated regular basis, what was the tax liability calculated, how much deduction under 10AA was claimed, how much deduction under 35AD was claimed, what should be the amount of depreciation on that 35AD amount. Okay, no? Then how much deduction you would have claimed under section 80IA to RRB except ATP. Now, after claiming all these, the total income was this much. You are showing that your adjusted total income is this much. Is this adjusted total income, getting tallied with the adjusted total income which should be calculated based on this report? Yes or no? If there is some discrepancy, everything will be given in that report. So you must be getting a report made from the chartered accountant in prescribed format, and the report from CA is must, that is written in 115 JD subsection 3. Okay, now do you know assessee is doing a business in IFSC. IFSC, you have heard, International Financial Services Center. I had talked about this when I taught you the tax rates on capital gain. International Financial Services Center. Do you remember this? So if you are having a business in International Financial Services Center, so for these assessees, AMT provisions applicable or not applicable? AMT provisions for these assessees also applicable, but the AMT rate, which is 18.5% for everyone, which is 18.5% for all assessees, will not be applicable for these assessees. The AMT rate for them will be only 9%. So this is given under section 115 JD subsection 4. So 115 JD subsection 4 says that AMT rate will be only 9% for those assessees who are doing their business in IFSC. For them also the AMT provisions are applicable. For all the assessees, the AMT provisions are applicable. So for you also the AMT provisions are applicable, even if you are doing your business in International Financial Services Center, Gift City, near Gandhinagar, I told you. Okay, no? But the rate applicable for you, unlike others, it will not be 18.5%. It will be only 9%. For you, only 9. You calculate your adjusted total income. On that, you don't apply 18.5%. You apply only 9%. 9% of adjusted total income will be your AMT. If that is higher than your regular tax, ignore the regular tax, pay this AMT. Got it, sir? JD1, when is the obligation? JD2, how to calculate the adjusted total income? JD3, report of a chartered accountant in prescribed format is required. Okay, and then JD4, the rate of AMT will be only 9% in case of assessees doing business in IFSC. Okay, and JEE, applicability and non-applicability, JEE1, JEE2. Okay, now pay attention. I have written JD everywhere. See, it is my mistake. I have written JD everywhere. This is not JD, this is JC. Everyone it is JC. This is my mistake. I have written JD everywhere. It is JC, 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 JC. JC. So when AMT provisions applicable, JEE 1 and 2. When the AMT is supposed to be paid, when the liability of AMT will arise, when you are obligated to pay AMT, JC1, adjusted total income, JC2, and then report from a chartered accountant, JC3, and 9% rate for IFSC units, JC4. It is C, it is not D. It was my mistake to write JD. Okay, It is JC. JC is correct. Now pay attention. Now what will happen now? See, in previous year 24-25, this is my previous year. Okay, now in this year, my regular tax which I calculated, no, regular tax for this year was 10 lakh rupees. So I calculated my total income regular way by taking all these deductions and all, and my regular tax came to 10 lakh rupees. In this year, I calculated my adjusted total income also, and on that I applied 18.5%. So my AMT liability, alternate minimum tax, which I was supposed to pay for this year, was 13 lakh rupees. Example. It can be any amount. Now the regular tax is 10 lakh for this year, and the AMT for this year is 13 lakhs. Tell me, am I liable to pay AMT in this year? The answer is yes, I am liable to pay AMT because my AMT is higher than the regular tax. See, AMT is higher, no? So in this year I am supposed to pay what? Alternate minimum tax. So what will be my final tax which I am going to pay? 13 lakhs. How much tax I was supposed to pay? 10. Did I pay that 10? Yes. But on top of that, over and above 10, I paid extra 3 lakhs. So those extra 3 lakhs which I paid, the difference between these two taxes is my AMT credit. How much is the AMT credit? 3 lakh rupees. Now for previous year 24-25, AMT credit is 3 lakhs. Now this will be carried forward for how many years? Next 15 years. In the next 15 years, whenever I am liable to pay regular tax, that time from that regular tax liability, I will be able to claim the credit of this 3 lakhs. To the extent of this 3 lakhs, I will not pay regular tax. From my regular tax, I will reduce this 3 lakh later on. Sir, in the next year, for example, in the year 25-26, my regular tax was 12 lakhs. And in this year, my AMT liability came to 12,90,000. Possible, not possible? Possible. Let's not take 12,90,000, let's take it 14,90,000. So now, will I pay AMT again in this year? Yes. Will I accumulate more credit this year? Yes. How much? 2,90,000. Now don't you think that this 3 lakh will be carried forward to this year first? So first of all, I will bring this 3 lakh in this year. Okay. Then this year I thought that I am liable to pay what? Regular tax. If I was liable to pay regular tax, then this 3 lakh would have been adjusted this year. But am I liable to pay regular tax? No. I am liable to pay AMT only this year. And this year also, extra tax I paid in the form of AMT amounting to rupees 2,90,000. So can I say for the previous year 25-26, this was my AMT credit. Now wait. This 2,90,000 will be carried forward for the next 15 years. And this 3 lakhs will be carried forward for next 14 years. Because this 3 lakh is carried forward for the first year. This is the first year. But in the first year, it cannot be set off. So now it will be carried forward for next 14 years. Getting my point, everyone? Hello, sir? So now pay attention. Now in the next year, can I say previous year 26-27? In this year, I was liable to pay 15 lakh rupees of regular tax. And my AMT also 15 lakh 40. Tell me how much I will pay this year. I will have to pay this entire 15 lakh 40. Again the AMT is payable. Now can I say 3 lakh and 2 lakh 90? 3 lakh will be brought forward for the second year and 2 lakh 90 will be brought forward for the first year. Now 3 lakh will be carried forward for the next 13 years and 2 lakh 90 will be carried forward for next 14 years. Okay, no? And do I have any credit for this year? Yes. This year also credit was 40,000. Are you all getting what is happening? Now in the next year, can I say previous year 27, 28? My regular tax was 20 lakh rupees and I was liable to pay only 15 lakh 50,000, 15 lakh 60,000 as AMT. Now tell me, in this year 27, 28, now in this year will I pay AMT or I will pay regular tax? So this year I have to pay regular tax. Okay, no? Now don't you think 3 lakh will be carried forward in this year, 2 lakh will also be carried forward in this year, 40,000 will also be carried forward for this year. 3 lakh carried forward third time, 2 lakh 90 carried forward for second time and 40,000 carried forward for first time. 40,000 next 14 years, 2 lakh 90 next 13 years, 3 lakh will be carried forward to next 12 years. Yes or no? Which will lapse first? Which is the oldest one? Color, yellow color. 3 lakh is the oldest one, no? Because this is already the third year in which it is carried forward. If I don't adjust it in this year, this will be carried forward for next 12 years only. So this is liable to lapse first as compared to 290 and 40. So it is always advisable to adjust the oldest AMT credit first. Yes or no? Just like the way in which we did for business losses. The oldest business losses first from the business income. Yes or no? So like that same way, the oldest AMT credit will set off first. So wait, please pay attention. Can I set off this 3 lakhs? Can I set off this 2 lakh 90 also? And can I set off this 40 also? Set off please. And now tell me how much remaining. $13,70,000. So 13,70,000 regular tax you pay for this year. But wait a second. If after adjusting the AMT credits, your regular tax becomes less than the AMT for this year, then that is not allowed. This year minimum tax we want 15,60,000. Either you pay your regular tax or you pay your AMT. See, if your regular tax was lower than 1560, we would have at least taken 15,60,000 from you, no? But we are not taking AMT 15,60,000. We are taking what? Regular tax, because it is more. And you had a credit also, credit of AMT, which you can adjust. Adjust, no, we are allowing. But don't adjust too much. Adjust only to the extent your regular tax becomes equal to your AMT. After adjusting this, if the regular tax is less, how can you pay a tax lower than the AMT in this year? At least 15,60,000 must be paid in this year. Wait a second. So after adjusting this, the regular tax cannot come 13,70,000. Even after adjusting these, it should be 15,60,000 only. So can I say I will adjust this 3 lakh fully? Yes or no? So 3 lakhs gone. Out of 20, 3 lakh adjusted. How much more I have to adjust? How much more? Out of 20, I have adjusted 3 lakhs. So the liability becomes 17. I don't have to, bring it below 15 lakh 60. So 1 lakh 40 more I will adjust, so that my regular tax becomes 15 lakh 60. Yes or no? That 1 lakh 40 will be out of this 2 lakh 90. Now this 2 lakh 90 will become 1 lakh 50 and 1 lakh 40 I will adjust. So total 4 lakh 40 I can adjust. Total 4 lakh 40 I can adjust, because can you see the difference between these two? That difference is 4 lakh 40. Now adjust your AMT credit only to the extent of 4 lakh 40, so that your regular tax does not become less than 15 lakh 60. Getting my point, sir? So can you adjust this 40,000? No. Can you adjust the 2 lakh 90 fully? No. Out of 290 you will have to adjust only 140, so that 150 will still remain out of that 290. Now in the next year, you were supposed to carry forward this 3 lakhs. But did you adjust this entire 3 lakhs? Yes. Don't carry forward because it is already adjusted. Now you were supposed to carry forward 290 also. Don't carry forward 290 because out of 290, 140 you have already adjusted last year. So how much remains? Only 150 will remain. That you carry forward. Yes or no? Out of this, only 150 will remain. And that 40,000 entirely will remain. Yes or no? So tell me, this 290, this 40,000, and out of this 290, how much remains? 150. I have done the same coloring so that you can identify. Okay. See, 3 lakh was my first year credit. Carried forward for third year. Third year, I am liable to pay what? Regular tax. So from that tax, I adjusted the entire 3 lakhs. 2 lakh 90 I still have 40. But I cannot adjust those 290 and 40 fully, because if I will adjust, what will happen? My tax liability will come below the AMT of this year. So I have to make sure that I adjust only that much AMT credit, which will not make my tax liability below AMT of this year. So how much is the AMT of this year? 1560. Adjust only 4,40,000 AMT credit, so that your regular tax becomes equal to what? 15 lakh 60. So if you will adjust the entire, what will happen? Entire AMT credit, if you will adjust, your tax liability will fall below the AMT of that year, which is not allowed. You have to at least pay 15 lakh 60 for that year. Okay, no? So how much you have to actually pay? They are saying don't pay 20 lakhs. Pay how much? 15 lakh 60 for this year. Regular tax also pay 1560. Not more than 1560, but pay at least 1560, no? So from your regular tax, you will take the credit of 3 lakh, you will take the credit of 1 lakh 40, so that your regular tax becomes 15 lakh 60. Will you remember this? This is the end of AMT. But wait. Very important point I will tell you. First we will solve one other question. Then the question which we have left, on that question I will take you. But one very basic question we are supposed to solve first. Okay, no? Then that question, unit A, unit B question. Guys, this one, this question, no? The question which we left just now, for which I was doing this discussion. Okay? On that question I am coming in some time. But before that, did you understand the entire AMT provisions? After understanding, let us take a very small basic example with numbers, so that you will come to know that how to apply these provisions in the question. Then I will come to that question. Okay, no? The main question. So you must have got my AMT notes. Okay? In my AMT notes, I have given all these things. See, these are the AMT notes which I have already forwarded you. Alternate minimum tax. Okay, these are the sections. And see, JC1, when are you liable? JC2, how to calculate adjusted total income. Then JC3, report from a chartered accountant. JC4 instead of 18.5%, 9% rate is there. JEE1 to whom the provisions are applicable. JEE2 when the provisions are not applicable. Even if these three deductions are claimed, the provisions of AMT will not be applicable. Okay, and here no, I will write one more thing, very important. Provisions of AMT are not made applicable to the assessees following 115 BSc. Because under 115 BSc you are not going to get these deductions also. Without taking these deductions, your total income you are going to calculate. So anyways, your total income should be higher only. Okay. And the tax rates are concessional tax rates, 115 BSc rate. Apply those 115 BSc rates. So whatever tax is there, you pay that tax only. We are not going to take a minimum tax from you. Pay only 115 BSc tax. Okay. Now see, the same thing I have done with you. This entire summary. Okay. Then right now I just explained this tax credit of AMT. How the tax credit will be formed, how it will be allowed. Okay, no, this entire provision I have explained. Now coming to this example. In this example, we have to assume that the assessee is not following 115 BSc. Okay, no. So the assumption which we are supposed to take in this question, assume 115 BAC not followed. Only then you will be able to apply what? AMT provisions. Okay, no? So now this is the question. This same type of question can come in your exams. Same type of question can come in the exam. Okay. So let's do it. Mr. Ram, he is a resident, age 45 years, meaning that he is not a senior citizen. Okay. His GTI is 24 lakh 50, which includes LTCG under section 112, 1 lakh 20, and royalty income 3 lakh 50 from books of scientific nature. Meaning the royalty which he is earning is from eligible books. So he must be an author, resident individual who is an author, writing artistic, literary, scientific books. So whatever royalty he has earned and shown taxable in his GTI. So his GTI includes qualifying royalty. That royalty will qualify for deduction under 80QQB. After taking deduction for related expenses, up to 3 lakh it can be claimed. So this 3 lakh 50 is shown taxable, meaning that after claiming deduction only this 350 is taxable. Yes or no? This is net royalty only. Gross goes, then expenses are reduced, then net amount is shown taxable, this amount. Okay. Now pay attention, this 350 already all the deductions are taken. Now nothing is mentioned. So this is a lump sum royalty, fully qualify. All the related expenses are already reduced. So this is the net qualifying royalty. This amount of 3 lakh, whichever is lower, will be allowed under 80QQB. Yes or no? Now, he has deposited 90,000 in PPF. So for this, he is going to get ATC deduction. and also paid medical insurance premium for self 28,000. So meaning that for this he is going to get 80D amounting to 25,000. Compute the amount of income tax payable. Now they are not telling you that the income tax payable will be alternate minimum tax or it will be regular tax. That you have to now ascertain, you have to identify. See, the moment you will see any of these deductions in the question, 10 AA, 35 AD, 80 IA to 80 RRB, any of these deductions you are seeing in the question. And in that same question, if they are telling you to calculate the tax liability, no, you have to be careful that in this question you might have to determine what AMT also. But see, in majority, in most of the cases, no, in the question the examiner will not try to put you in trouble like this. In majority of the questions he will tell you only, the institute will give you only that also check whether he is liable to pay AMT or not. Also check whether AMT provisions are applicable. If yes, then whether he is liable to pay AMT or not. This sentence will be given in the question. But what if this sentence is not given? You have to apply your mind. You have to remember, okay, that if income tax liability is given in the question and any deduction from 10 AA, 35 AD, 80 IA to RRB, any deduction is claimed, okay, then there is a possibility that AMT provisions might get applied. Okay. So now, first of all, we'll have to calculate the total income regularly and regular tax also. We have assumed that 115 BSE is not followed, so we are going to get all these deductions to calculate the total income. We'll take the deductions, we'll calculate the total income, and then we'll calculate the tax liability by applying normal rates. But normal rates will be applied on all the income except LTCG. On that we are supposed to apply 20%. Yes or no? Okay, now let's see. Your total income was 24,50,000. Out of that I have reduced 1,20,000 because this is long term gain. From this you cannot take chapter 6 deduction. Chapter 6 deduction you can take from your balance GTI only. So later on we will go and add that 1,20,000, but right now 1,20,000 is eliminated. Okay. Now balance GTI is 23,30,000. From that, can you take ATC 90,000? PPF? Can you take 25,000 under ATD? 28,000 under ATD, but cannot be claimed fully. You will have to claim 25. Under section 80 QQB, royalty will be allowed, but to the extent of 3 lakhs only. That entire question same. Okay, no. Now it is 19,50,000, 15,000. Now that long-term gain will also be included in my total income. Yes or no? Why that was excluded? Because from that long-term gain, I cannot take chapter 6 deduction. I will have to show that entire amount in the total income. So my total income will now be 20,35,000. Now tell me, are you an individual? Yes. Meaning other than company. Other than company. Have you calculated your total income? Yes. But while calculating your total income, have you taken 10 AA? No, sir. Have you taken the deduction of 35 AD? No, sir. But have you taken 80 IA to 80 RRB? Yes, you have taken 80 QQB. And even after taking these heavy deductions, your total income is more than 20 lakhs. So now the AMT provisions will also be checked. But for that AMT, now you will have to first adjust this total income. But wait, that adjustment we'll do later on. First of all, this is your normal total income, regular total income. Can you apply the tax rates? And can you calculate the tax? We are supposed to do that only. We are supposed to calculate the regular total income and regular tax. Okay. So out of 20,35,000 on 1,20,000, I will apply 20%. This is my tax on long-term gain. Okay. And on the balance 19,15,000, I will apply normal rates. So my tax will be 3,87,000. I'm not going to do these calculations now. You know this calculation okay. Now the tax on LTCG and tax on my balance income, both the things taken together will give me 4,11,000. That is my tax on total income. This is not my regular tax payable. This is tax on total income, basic tax. Now if this total income was less than or equal to 5 lakhs, I would have got rebate. But since it is more than 5 lakhs, I'm not going to get any rebate. Wait, is my total income more than 50 lakhs? No. If it was more than 50 lakhs, I would have applied surcharge. But surcharge will also not be applicable. So I will apply only 4%. So my tax payable will be 427,440. Guys, this 427,440 is including cess, including surcharge, total tax. So if I am liable to pay this tax, so from my pocket this amount will go to the government. But the government is saying, sir, Mr. Ram, to you AMT provisions are also made applicable, no? Please check whether the 18.5% of your adjusted total income, meaning AMT, if it is more than your regular tax, we will ignore this total income, we will ignore this tax, and we will take AMT from you, and adjusted total income will be deemed to be your total income. Yes or no? So first I will have to calculate the adjusted total income. To calculate adjusted total income, I will have to take this total income on my calculator, and whatever 10AA deduction I have claimed, I will add. Have I claimed any 10AA? No. Have I claimed 35AD? No. Have I claimed 80 QQB? I will add that amount. 3 lakh rupees which I have claimed, I will add. So in 20 lakh 35,000, I will add 23 lakh. 3 lakh, meaning my total income will be, adjusted total income will be 23 lakh 35,000. Did you see how did I calculate? Now pay attention. This amount is nothing but 18.5% which I have calculated on adjusted total income. Now tell me, what is my alternate minimum tax? 18.5% of adjusted total income, 4,31,975. Now my first question, please be very careful. This 18.5% does not include any surcharge, does not include any cess. This is the basic rate of tax. So by applying the basic rate of tax, you have calculated the AMT. Can I say this is without any surcharge, without any cess? So if you want to compare this amount, you will always compare with the regular tax, which is without surcharge and cess. Meaning that this is basic AMT will be compared with your basic amount of tax. Yes or no? So whenever the comparison will happen, comparison between this and this will happen. Yes or no? If you by mistakenly compare with 4,27,440, your answer will be wrong. Why, sir? Because this 18.5% is without any surcharge or cess, meaning this amount is not including any surcharge or cess. So with this amount you have to compare your regular tax, which is without what? Surcharge and cess, and that is not 427,440, that is 4,11,000. Now tell me, your regular tax is 4,11,000 only, and your AMT is 4,31,000. Is your AMT more than your regular tax? Then, sir, your total income will be ignored and your regular tax will be ignored. This adjusted total income will be deemed to be your total income, and this will be your income tax liability. Now pay this tax. But wait, to pay this tax, now you will have to add surcharge if applicable. Now you will see this total income. Check. Is it more than 50 lakhs? No. So still the surcharge is not applicable. Yes or no? So 431,975 plus 4%. You are going to get 449,250. Did you get this? So you are liable to pay this much, but you will have to add 4% cess also, no? So 449,250. See, AMT got applicable and the government extracted how much money from your pocket? Government extracted this also, government extracted this also. So total extraction from your pocket was 4,49,250. Now if AMT was not applicable, how much extraction would have been done from your pocket? Only this much, no? So you were liable to pay this much. But how much you are paying? Actually 449,250. How much extra you have paid? Yes, this amount. So whenever you will calculate AMT credit, please remember AMT credit is not the difference of these two items. Yes or no? AMT credit is the difference of AMT including cess surcharge minus regular tax including cess surcharge. Getting my point, sir? Will you be able to calculate like this? If this type of question will come in the exam, it will be for minimum 10 marks. What they can do, they can change a little bit informations over here. That's it. Now, if you want to know, I can make 10 questions out of this one basic question. You just have to remember. Instead of this giving this GTI directly, what I will do? I will give you few details. On the basis of that, you calculate GTI. Now in that I will give you salary also, I will give you house property also, I will give you other sources. Or I might give you PGBP, I might give you other sources and one income salary. I might introduce the provisions of clubbing also. I might introduce the provisions of set off also. It can be any type of question. Getting my point? But the solutions will be like this only. Will you be able to do it? So this was the only example which I have created for you all. Okay. So see this example properly. We have already solved this entire question. Now come to the question which we were solving. This question. This question only we were doing and we left the question in between and we studied the entire AMT provisions. And now we are again on this question. Okay. Now pay attention. How many businesses you are having? SEZ business and specified business. Now pay attention. For both these businesses, the profits and all the details are given in the question. Okay. Now here, if I will say that if I talk about my SEZ business and my 35 AD business, one business is manufacturing of washing machine and the second one is warehousing facility for storage of agricultural produce. Yes or no? Now the profit as given. What was the profit of my SEZ business? 40 lakhs. 40 lakhs. And what was the profit of my 35 AD business? 1 crore 5 lakhs. Now see, from both the profits now, I am supposed to take some deduction. I am going to take deduction under section 10AA from the first business. Then I cannot take it from 35 AD. I will take 35 AD deduction. Not from the first one, but from the second one. Now pay attention. Do you remember I taught you 35 AD? That time I told you if you are claiming 35 AD for a specified business, then you cannot claim 10AA for that same business. Somebody might have a doubt. Sir, you only said that 35 AD while teaching 35 AD, that if you are claiming 35 AD, you cannot claim 10AA, you cannot claim 80 IA to RRB. Part C deductions of chapter 6A, 80 IA to 80 RRB. If you are claiming 80 IA to RRB or 10AA, then you cannot claim 35 AD. But in this question, you are claiming both. How it is possible? Sir, same business they are talking. If for that warehousing business you are claiming 35 AD, no, so for that business you are not claiming 10AA. Check. For this SEZ business 10AA you are claiming, so you are not claiming 35 AD. For that same business you cannot claim both the benefits together. Either claim 35 AD, forget about 10AA, or claim 10AA, forget about 35 AD. For the warehousing business, anyways I was not eligible to claim 10AA. Why? Because that warehousing business I did not start in SEZ. But what if I would have started that warehousing business in SEZ? Then I had a choice that whether from that warehousing business I can take 10AA also, or I can take 35AD. I cannot claim both. I will have to claim only one. Okay. So from different business, different deductions are taken. Getting my point? So this is allowed. Now tell me, 10AA deduction if you are going to calculate. Now tell me, out of the total turnover, 80 lakhs turnover is what? 80 lakhs turnover is export turnover, meaning 80% of the turnover is export. So out of this, 80% will be your export profit, no? Tell me how much 80%? 32 lakhs. Now this 32 lakh is the export profit for the current year of your SEZ business, which you commenced operations in the year 1920. Can you see? You commenced the operations in 1920. So in the year 1920, when you commenced the operation, 1920 was the first year, 2021 second year, 21-22 third year, 22-23 fourth year, 23-24 fifth year, and 24-25 is the sixth year. Can I say this is the export profit of the sixth year? Hello, this is the export profit of the sixth year. This is your EP, export profit. Out of this, only 50% will be allowed under 10AA. That is 16 lakhs. Getting my point, sir? The balance amount will be taxable. Balance 16 will be taxable, and that 8 lakh remaining will also be taxable, because 32 lakhs out of 40 is export profit. So 8 lakh is anyways taxable. Out of 32, only 16 is allowed as a deduction. So 16 will also be taxable. So 16 plus 8, 24 will be taxable. Hello? And 16 will be allowed as a deduction. Getting my point? So what I will be doing, I will be directly taking 10AA deduction amounting to 16 lakhs. So therefore my eligible profit will be 24. How did this 24 come, sir? 8 lakh profit related to domestic turnover and 16 lakh export profit, which I cannot claim under 10AA, remaining 50%. So 16 lakh plus 8 lakh is nothing but 24 lakhs. Okay, sir? Now 35 AD, I started that business in this year, warehousing business in this year. The operations are commenced. So the year in which the operations are commenced, in that year, entire pre-commencement capital expenditure I can claim, other than cost of land, goodwill and financial instruments. So did I have any capital expenditure incurred for this business prior to commencement of business? Yes, I incurred 75 lakhs. So that 75 lakhs entirely I could have claimed, but I'll not be able to claim entire 75, because that 75 includes 10 lakh rupees of what? Cost of land. So out of this, I will be able to claim only 65 lakhs and not 75 lakhs. Yes or no? So 65 lakhs I am claiming under section 35 AD. Now tell me, will you get 40 lakhs over here? Yes or no? Now can you calculate your PGBP income? This is your taxable profit from first business, taxable profit of second business. If you will add both of them together, 64 lakhs will be your total taxable profits. This is your PGBP income. Done, no? Now add income under other heads. No such income is given, sir. Other heads income was not given in the question. Okay. So my gross total income will be 64 lakhs only. Now out of this less deductions under chapter 6A. There were no deductions also under chapter 6A. So my total income is 64 lakhs. Sometimes no, the examiner skips or the institute skips those parts which are nil. See, in the solution, if you will see, no, this entire 64 lakh your PGBP income is directly taken as total income. Why? Because there was no other heads income, there was no chapter 6A deduction. So ultimately your total income is going to be 64 lakhs only. Hello? So please don't forget the process. I am telling you again and again. Okay. Now on this total income, you will apply the normal rates only. So the tax liability will be first 2,50,000 no tax. The assessee is not a senior citizen, no? Is it given in the question that the assessee is a senior citizen? No, he is not a senior citizen. Meaning that first 2,50,000 no tax. 2,50,000 to 5 lakh, it will be 5%, 12,500. Then 5 lakh to 10 lakhs, 5 lakh rupees. On that 20% will be 1 lakh. And now the total income over and above 10 lakhs. How much is that total income? 54 lakhs. Yes or no, sir? So on 54 lakhs, you will apply 30%. That is 16,20,000. 16,20,000 plus 1,12,500. You are going to get 17,32,500. Did you all get this? Now, will you pay this much tax liability or you are going to pay surcharge also? Surcharge also. Why? Because see, your total income is more than 50 lakhs. So on this, you will have to add surcharge at the rate of 10%. 10% of 1 lakh, 17 lakh 32,500 will be 173,250. Now if you add both of them, you are going to get 19 lakh 5,750. Will you add 4% cess? This is what? Tax on total income including surcharge. Now add health and education cess at the rate of 4%. So 76,230. Add 1981 980. 1981 980. This will be your final tax payable. But tell me, are you an individual? Meaning a person other than a company? Yes, sir. Have you claimed any deductions while calculating your total income 64 lakhs? Have you claimed any deductions under 10AA, 35D, 80I8 or? Yes, you have claimed two deductions, 10AA and 35D. Oh, so after claiming those two deductions, still your total income is more than 20 lakhs, individual. Then for you, EMT provisions will be applicable. So now what you are supposed to do? Individual who is other than company claimed deductions under section 10AA and 35AD, yes or no? And after claiming this deduction, total income is greater than 20 lakhs. So now the AMT provisions will become applicable. Now whether you are liable to pay AMT or not, that we are going to check now. Okay. Now when there will be obligation? When there will be obligation? Tell me. Hello sir. If the adjusted total income on that 18.5% is more as compared to this amount, guys, please remember, you have to check this amount, comparison this amount, but AMT credit, when you will calculate, you will take this amount for AMT credit. Okay, so right now for the purpose of comparison, first I will calculate adjusted total income. So to calculate adjusted total income, what I will do, adjusted total income is nothing but my total income which I have calculated, 64 lakhs. So this 64 lakhs I have calculated by taking 10 AA as well as 35 AD both, no? Hello sir. So will I add both of them? Yes. So how much deduction under 10 AA I have claimed? 16 lakhs. I will add back. How much deduction under 35 AD I have claimed? 65 lakhs. But don't you think that on this 65 lakh rupees of building, I would have given the depreciation for the full year at full rate? Why full rate? Assuming that the building was used for a period of 180 days or more during the year. So the first year depreciation would have been at full rate. Hello sir. So 65 lakh was for building, and on that building, if I calculate 10%, so 10% of the cost 65 lakh is 6 lakh 50 depreciation. Don't forget to reduce this amount, friends. This is very, very, very important. People usually forget to, reduce this amount. So on this amount only, this is the depreciation at 10%. So now if you will calculate, you will get 64 lakhs plus 16 lakhs plus 65 lakhs minus 6 lakh 50,000. You are getting 1 crore 38 lakh 50,000. 1 crore 38 lakh 50,000 is your adjusted total income. Now calculate AMT at the rate of 18.5% of this amount into 18.5% will be 25 lakh 62,250. Now please check color, blue color, blue color. Now can I say regular tax? And this is AMT. My AMT is higher because AMT was 25 lakh 62,250 and regular tax 1732,500. Therefore, total income is equal to how much? 64 lakhs. Will now be ignored, and tax liability, which was how much? 1981 980. This will also be ignored. Now what will be your total income? It will be 1 crore 38 lakh 50,000. On this, what will be your tax liability? 25 lakh 62,250. But don't you think that on that you will have to pay surcharge also? Now the surcharge will be at the rate of 15%. Why sir? Total income now is 1 crore 38 lakh 50,000, which is more than 1 CR. So whenever the total income is more than 1 CR, the tax is increased by the surcharge by 10% or 15%? 15%. So 25 lakh 62,250, 250 into 15% will be 384,338. Okay. Now add both of them. You are going to get 29 lakh 46,588. Now you have to add 4% cess, which will be 1,17,864. Okay, add both of them. we are going to get 30,64,452, and please round it off. 30,64,450 rounded off. Now your tax liability, total income will be this much and your tax liability will be this much. Okay. How much amount the government is extracting from your pocket? 30,64,450. 30,64,450 if AMT was applicable, yes or no? But if AMT was not applicable, how much the government would have extracted from your pocket? The government would have extracted only 19,81,980. 19,81,980. So how much extra? It is 10,82,470. This is your AMT credit. Will you be able to calculate like this? Now let's check the solution. Question number 12, no? Last question. See, first of all, what we have done, we have so far regular provisions, no? The regular provisions we have followed. Okay. So under the regular provisions, 24 lakhs and 40, 64 lakh PGBP income we got. Okay. 64 was our total income also. And we also got 19,81,980 and 17,32,500. We got these two figures. Sure, sir. Now, please check the total income was 64. Tax is this much and final tax was 1981. Now we computed the adjusted total income. Our adjusted total income was 138.50. Yes. What was the tax? 2562 250. Yes or no? So this also is matching. This is also matching. Tell me, is this amount more than this amount? Yes. So now the total income will be 1,38,50,000 and your tax 19,81,980 will not be taken from you. How much will be taken from you? 2562 250. But on that you are supposed to pay surcharge, including surcharge this much, and the tax will be this much. Our final tax was this only, AMT. And what was the AMT credit? AMT credit 10,82,470. We also calculated 10,82,470. Everyone. Now see, this was the solution if you don't follow 115 BSc. But what if you follow 115 BSc, sir? What if you follow 115 BSc? If you follow 115 BSc, no? Simple. If 115 BAC was followed, then don't you think here the deductions which you were getting, you are not going to get anymore? So what I'll do now, I'll copy this entire part. Okay. AMT provisions will not be applicable. Done? AMT provisions will not be applicable, but I'll copy the entire part. What I will do, please check now. If I don't follow 115 BSc, no, if I follow 115 BSc, okay. Now this will remain same, this will remain same. Will I get 16 lakhs? No. Will I get 65 lakhs? No. So can I say my profit here will become 40 and profit here will become 1 crore 5 lakhs only? Yes, sir. 40 and 1 crore 5 lakhs. I'm not going to get any deduction under 35D. I'm not going to get any deduction under 10AA. So my profit in that case will be 40 and 1 crore 5 lakhs. Please check. if I pay tax under default tax regime. So 40 and okay 1 crore 5, but I will get 6,50,000 depreciation. Depreciation is not denied, no? So you cannot take 35 deduction, but still you can take depreciation on that amount, normal depreciation. So normal depreciation would be 650, then this will be 98,50,000, no? 1 crore 5 lakhs minus 6,50,000, 98,50,000. Now 98,50,000 plus 40 will give you 1 crore 38,50,000 only. Sure, sir? Other incomes nil. So your gross total income will be 1 crore 38,50,000. And anyways, under 115 BSE you don't get any chapter 6A deductions. Yes or no? So this will become 1 crore 38,50,000. Now the tax you are supposed to calculate properly. Okay, no? Tax. Then surcharge also. Then tax including surcharge plus cess you are supposed to do. Now pay attention. First 3 lakhs. Will there be any tax? No. No tax. Nil. Then 3 lakh to 7 lakh. 5%. 20,000. 7 lakh to 10 lakh. 3 lakh. On that 3 lakh, 10% will be 30,000. Then 10 lakh to 12 lakh. 2 lakh. On that 2 lakh, 15% will again be 30,000. 12 lakh to 15 lakhs. 3 lakhs. On that 3 lakh, 20%. It will be 60,000. Now how much is the total income over and above 15 lakhs? It is 1 crore 23 lakh 50,000. On that you will apply 30%. So this will be 37 lakh 5,000. Now add 37 lakh 5,000, 60,000, 30,000, again 30,000, again 20,000. You are going to get 38 lakh 45,000. Now the rate of surcharge here will not be 10%. Now the rate of surcharge will become 15%. Okay, no? So into 15% will be 5,76,750. So it will be 44,21,750. And 4% of that will be 1,76,870. 45,98,620. See, if you don't follow 115 BSE, your final tax will be this much. Please check the final amount. 45,98,620. 45,98,620. Now, if you follow 115 BSE, then they are going to take how much from you? 30,64,450. It is still lower than 45 lakhs, no? Hello? So if you don't follow 115 BSE, the government is going to take AMT from you. The government is not going to take 19,81,980. The government is going to take 30,64,450 from you. Yes or no? But that is still lower than 45 lakhs. And guys, one more thing. Even if the government is taking a higher amount, don't you think that whatever amount extra the government is taking over and above 19,81,980, that amount they are allowing you in the form of AMT credit also. So it is always advisable in such case to tell your assessee, tell your client that, sir, don't go for 115 BSE. Yes, shift out. Because if you will shift out, no, AMT provisions will be applicable on you. And as a result of that, you are not going to pay the normal tax. You are going to pay how much tax? You are going to pay AMT only. But that is still lower than 115 BSE. And the extra amount which you are going to pay in the form of AMT, that will be given to you as AMT credit, which you can set off any time after within the span of next 15 years from your regular tax liability. Getting, sir? Done, sir? This is the end of that question. How was this question? Good, no? This question is there in the ICI study mat. since last 4 years, minimum 4 years, and has not been asked in the exams. So God knows you are the lucky person getting this same question in the exam. Not even same, in terms of amount they will do some changes, but if that similar type of question will come in the exam, no, this will be for minimum 10 marks. Minimum 10 marks. Mark this question important. This is the only question having AMT provisions in your ICA study mat. Getting my point, sir? Done, sir? Perfect. Okay. So let's look at section 115 BSE. Default tax regime 115 BSE. Please. To whom this provision applies? This provision is applicable to individual HUF, AOP, BOI and AJP. Okay, and AJPs must be other than cooperative societies, because for cooperative societies there is a different scheme which is prescribed. Okay, no? So if for cooperative the AOPs which are cooperative societies, for them if different scheme is prescribed, so the cooperative societies are not covered by 115 BSE provisions. Okay, now what you are supposed to do? See, whenever you compute your total income, whenever you compute your total income, compute your total income without taking certain specified deductions and exemptions. So, under section 115 BSE, they are telling you to compute what? The total income without taking certain specified deductions and exemptions. Which are those deductions? Which are those exemptions? The list is given. We'll see that list. Okay. Now, once you calculate your total income like this, now from your total income, whatever special income is there, so special incomes means which incomes? STCG 111A, LTCG 112, LTCG 112A, winnings income is there. Okay, all those special incomes which are there, apply special tax rates which are applicable on those incomes, yes or no, and calculate the tax. But on the balance part of your total income, you are going to apply concessional tax rates which are given under section 115 BSE only, and calculate the tax. Now add both of these taxes, you will get tax on total income, then surcharge, rebate, 4% cess, gross tax liability, TDS, TCS, advance tax you reduce. Then you can reduce what? Your relief under section 89. All those things are same. But your tax liability, basic tax liability calculation will happen like this. But these rates will be allowed only if you don't take certain deductions and exemptions. And now this is your default scheme. This is your default. If you don't want to follow, you want to claim all the applicable deductions and exemptions, then you'll have to shift out. So from 115 BSE, you shift out. So you go to optional tax regime. This is when you don't follow 115 BSE. Okay, now you shift out, meaning you are not following. Shift out means you are not following 115 BSE. Okay, so you are going in the optional tax regime. Now in the optional tax regime, take all the applicable deductions and exemptions. And you will get your total income. Okay, no? Now, in that total income, what you are supposed to do? You are supposed to do the same thing. On the special incomes, you will apply special rates. You will get a tax amount. And on the balanced total income, now you are going to apply normal tax rates which are given in Annual Finance Act. Then you calculate a tax amount. This plus this plus this is tax on total income. We have been doing like this only now so far. Okay, so tell me, without taking specified deductions and exemptions, the total income will come. On that total income, you apply tax rates under section 115 BSE. But if you are taking deductions and exemptions, then on your total income, you're supposed to apply what rates? Normal tax rates. Then you calculate this tax. Both the taxes will be different. Now what are the normal tax rates? Did I tell you? Have I explained you what are the normal tax rates? In the very first chapter only we have studied the normal tax rates. What are the special tax rates? We all know. LTCG how much tax rate, STCG how much tax rates, okay, and winnings income how much tax rates. We all know that also. Do you know 115 BSE rates? Yes, we have been doing that only. So what are the 115 BSE rates? Come on, the tax rates which are going to apply here. These tax rates on this balance total income, whatever tax rates you are going to apply. What are these tax rates? Concessional tax rates. First 3 lakhs, no tax. 3 to 7, 5%. 7 to 10, 10%. Then 10 to 12, 15%. And then 12 to 15, it is 20%. Then above 15 when you will go, now see, from 20 directly jump to 30. Don't make it 25. Above 15, it is always 30. Okay. Now, this is the basic exemption limit which you are going to get if you follow 115 BSE. And this is the same. Even if you are a senior citizen or a super senior citizen, it will not change. So any individual, HUF, AOP, BY, AJP, AOP other than cooperative societies are supposed to apply these tax rates on the balanced total income, which is calculated without taking certain deductions and exemptions. Yes or no? Apply these rates. But these rates are applicable for all types of assessees. Individual, HUF, AOP, BY, AJP. Whether the individual is senior citizen, then also this will be applicable. Whether that individual is a super senior citizen, then also it will be applicable. But in the normal tax scheme, optional tax scheme, this is 3 lakh rupees basic exemption limit. First 2 lakh 50 basic exemption limit for all. But if it is a senior citizen, then it is 3 lakhs. Super senior citizen, then it is 5 lakhs, which is not applicable here. Okay, this is one important thing which you are supposed to remember. Now second thing, once you calculate this tax, okay, no, this will be your tax on total income, and here also you are going to get tax on total income. Okay, now on this tax on total income, are you going to apply surcharge? Surcharge at what rate? See, we usually apply surcharge at the rate of 10% or 15% or 25% or 37%, depending on the fact that how much is the total income. Yes or no? See, right now what I am doing now, I am doing a comparison between normal and 115 BSE. Okay, so you will come to know where you are supposed to do what. Done. So surcharge will be 10%, 15%, 25% or 37%. And do you know that this 25% and 37%, this is a higher rate of surcharge? Which I told you that time also, that this higher rate of surcharge not applicable on tax which you have calculated on STCG 111A, on LTCG 112A, and on LTCG 112, and also one tax on dividend incomes. Yes or no? Did I tell you this? Yes, we all know that the higher rate of surcharge 25%, 37% not applicable on these four taxes. Now pay attention. Copy and paste. Same thing. Can you see? Same thing. There is no change. But the only change is this 37% is not applicable. So if your total income is more than 5 crores, the rate of surcharge used to be 37%, no? Here it will remain 25% only. 37% is not applicable. See, they are attracting you. Don't shift out. Don't shift out. Stay here. That's why they are giving you what? Concessional tax rates, which you just saw. Okay. Still you are planning to shift out. Then they are telling you, see, if your total income will be more than 5 crores, no, still we will not charge 37%, we'll charge only 25%. So don't shift out. Another benefit. So one benefit, there is a benefit in the tax rate. Second benefit, there is a benefit in the rate of surcharge. If your total income goes beyond 5 crores, then the rate of surcharge will be 25% only. It will not become 37%. Yes or no? Now, one more thing. Rebate was applicable. Do you remember rebate? Under section 87A. What was the rebate? Tell me. Tax on total income excluding tax on LTCG under section 112A. Because this tax cannot be taken as rebate. I have already told you. Other than this, whatever tax on your total income is there, you can claim as rebate or 12,500, whichever is lower. This used to be our rebate, but the rebate was available only if you are a resident individual having a total income less than equal to 5 lakh. This was the condition to claim the rebate. And if the rebate was available, it was available how much? Maximum 12,500. If you will shift out, this will be your rebate. If you will not shift out, no, come here. Same. Copy, paste. You are going to get rebate here also. But now the amount of rebate, instead of 12,500, it will be 25,000. Everything remaining same. LTCG 112A tax cannot be claimed as rebate here also. But the amount of rebate will be 25,000. Maximum rebate under 115 BSE. Okay, no? Hello, sir. Understanding, Krishna? Now pay attention. Your total income, even if it is more than 5 lakhs, still you are going to get rebate. But it should be less than equal to 7 lakhs. Are you seeing the difference? Now pay attention. Here no rebate. If total income is more than 5 lakhs. The moment your total income becomes more than 5 lakhs, meaning 5 lakh 1,000 also, then also you are not going to get any rebate. If you will shift out, first the total income limit will be less, amount of rebate will also be less, and the moment your total income will be more than 5 lakhs, we are not going to give you any rebate. Okay? Copy paste. What is the limit over here? 7 lakh limit is there, no? So what if your amount is, total income amount is greater than 7 lakhs? Okay. You will still get rebate. You will still get rebate. But the total income exceeding 7 lakhs, no? There has to be a marginal increase only. Marginal increase. That does not mean that we will take away your rebate. Still you are going to get the rebate. Now in this case, how the rebate will be calculated? Simple, 3 steps. Step number 1, A. Calculate your total income minus 7 lakh rupees. Because see, till 7 lakh you were getting rebate, no? So now we will see how much total income is more than 7 lakhs. Okay. For example, total income is 7 lakh 5,000. Everyone, total income is 7 lakh 5,000. So 7 lakh 5,000 minus 7 lakh. How much total income is more than 7 lakh? Only 5,000. So your total income increased by only 5,000. And you are not going to get rebate. No. We are still going to give you rebate. Do one thing. Tell us what is the tax liability. What is the tax liability on your total income. So first you will have to calculate the tax liability on your total income. Can you calculate the tax liability on your total income 7,05,000? Yes, very easy. First 3 lakhs no tax. 3 lakhs to 7 lakhs. That is 4 lakh. On that you will apply 5%. It will be 20,000. And above 7 lakhs it is 5,000 only. On that 5,000 you will apply 10%. It will be 500 only. So your tax here will be 20,500. Now you will have to check if the tax amount on your total income, which is B, if that is higher than increase in your total income over and above 7 lakhs. How much was the increase? Tax is 20,500, but your total income is only increasing by 5,000. Just imagine, till 7 lakh you were getting rebate, no? 25,000. And the moment your total income became what? Total income became 7,05,000. Entire 25,000 benefit washed out. And you are supposed to pay 20,500. Is it good? No, na? So if that tax which you are calculating is more than the increase in your total income. So increase in total income was 5,000 only, no? The tax is 20,500. Is this 20,500 more than 5,000? Yes. If this equation is fulfilled. What did I say? If this equation is fulfilled, then you are going to get rebate. Then also you are going to get rebate. And how much will be the amount of rebate, you know? Amount of rebate in this case will be B minus A. What was your B? 20,500. What was your A? 5,000. B minus A, 5,000. Reduce 5,000 from 20,500. You will get 16,500. Now we are not going to give you entire 25,000 rebate, but still you are eligible to get 16,500 rebate. So how much? 20,500 minus, sorry, 15,500. Not 16,500, 15,500. 20,500 minus 5,000. It will be 15,500. So we are not going to take away the entire 25,000 from you. Some portion of your rebate will go away, but still you are eligible to get 15,500 as rebate. So how much was your tax? 20,500, no? Don't pay 20,500. Take 15,500 as rebate. So final tax will be 5,000. Your tax will also be 5,000 if your increase is 5,000. Got it, sir? Let us take one more example. 7,20,000. Your total income became 7,20,000. Apply this. Don't do anything. Is your total income more than 7 lakh? Yes. How much? 20,000. So A will be 20,000. Now B, calculate the tax on 7,20,000. 7,20,000. Yes or no? So first 3 lakh no tax. Then 3 lakh to 7 lakh. It is 20,000. On 4 lakh 5%. And on 20,000 which is over and above 7 lakh, on that 20,000 you are supposed to pay how much? 10%, 2,000 rupees. So what is your total tax? 22,000. Is it more than 20,000? Tax is 22 and increase in total income is 20,000. Hello? So is it still tax is more than 20,000? No, 22,000 is more than 20,000. You are going to get rebate. How much? 2,000. So how much tax you are supposed to pay? 22 minus 2,000 rebate. You pay only 20,000 tax. Getting my point? And add 4% cess and all, which you are supposed to do every time. Yes or no? What if your total income was 7,50,000? So A will be 50,000. B will be how much? B will be how much? Come on, calculate. What will be the tax on 7,50,000? 25,000 only. Done now? First 3 lakh no tax, then 3 to 7 20,000, and then 7 lakh to 7 lakh 50. On 50,000 you are supposed to calculate 10%, 5,000, 5,000 plus 20,000, 25,000. Now tell me, is 25,000 more than 50,000? 25,000 tax is more than increase in total income 50,000? No, you are not going to get any rebate. Pay entire 25,000 tax plus 4% surcharge. Getting my point, everyone? Will you be able to do it? Will you be able to do it? Tell me yes or no. Sure? Okay. So this was your rebate. Now please pay attention. See, I have explained this part. I have explained this part also. Okay. And I have just now explained this part also. Please read this. Same calculations we have done, no? Now pay attention. Can I say tax including surcharge? Tax including surcharge will come on that 4%, 4%. Or tax after rebate can also come on that also 4%, 4%. So 4% cess was applicable here. Health and education cess is applied on tax on total income including surcharge or after rebate, that you are going to apply here also. Okay, sir, that 4% is supposed to be paid both the times. Don't forget to apply this 4%. Okay. Now you are going to get gross tax liability. Out of that gross tax liability, reduce TDS here also, TDS here also, TCS here also, advance tax, relief, everything is same. Then finally the net tax liability will come or refund will come. Yes, sir. Now, did you understand the comparison? Okay, don't commit mistakes. Now pay attention, which are the deductions and exemptions? Which are the deductions and exemptions which are specified that you cannot take these deductions or exemptions if you are following 115 BSc. Okay, so please pay attention. This is given in important notes. Note number 1. Can you see? Can you see? But wait, before that, no, I would like to tell you this. This health and education says I have told. Next, marginal relief concept we did. Do you remember? Yesterday, in one question also we did marginal relief. There, 115 BSc tax rates were applicable. So, the marginal relief concept remains same. Whenever your total income goes above 50 lakhs or 1 crore or 2 crores or 5 crores, so you are liable to pay surcharge or you are liable to pay a surcharge at higher rate. Yes or no? So because of that surcharge or because of a higher rate of surcharge, if the increase in tax is more than increase in total income, then you get the marginal relief. The concept which you used to apply there will be applicable here also. There is no change. But the only change is apply normal tax rates and calculate tax. Apply 115 BSc rates and calculate tax. Everything is going to be same. Got it, sir? Now, please read this part. You don't know this? or you know, this is something which I wrote here. Shift out. Now this is default. So if you don't want to follow, you want to apply the normal rates, shift out, because this is default. Got it, sir? So this thing also I have explained. Okay. Now, don't you know this? Just now, some time back, we have done one question. Mr. X having two types of business. What if 115 BSc followed? What if 115 BSc not followed? AMT applicable, not applicable. Whenever 115 BSc is applicable, remember, those heavy deductions are not allowed. 10 AA, 35 AD, 80 IA to RRB, yes or no? See, if we are not allowing those deductions only, so your total income is not going to come less. Understanding? Your tax liability will not be less. You are going to pay more tax only because your total income will be more. And putting you in the trouble of AMT also again will not be good. See, another effort to keep you in 115 BSc. That if you will shift out, remember, if you will shift out, AMT provisions will be applicable, will charge more tax. If the tax is less, will not charge less tax, will charge more. So you will say, charge, no problem. Even if higher tax is charged in the form of AMT, that we are going to get a credit, no? But what if higher tax is charged here? We are not going to get any credit also for that tax. Yes or no? So they are trying to convince you, stay here, we will not apply AMT provisions. Getting my point? Now tell me, which all deductions are not allowed? Think from salary head. Do you remember salary head? We did one LTA, 10.5 exemption, 10.5 LTA for a journey performed in India, exempt journey performed by air, journey not performed by air, then places are connected by rail. That exemption we did. That exemption will be applicable if you shift out. But if you stay in default tax regime, LTA exemption will not be applicable. Full LTA will be taxable. 10.5 will not be available. Then do you remember HRA exemption you used to get? That entire HRA exemption you are not going to get. Full HRA will be taxable. Do you remember those special allowances, traveling daily in a conveyance with academic or research helper in uniform? Children, two children, running and commuting, where? Underground, in tribal area. So those exemptions were available for these allowances under section 1014. Now whenever you shift out, you get the exemption for these allowances based on amount spent or based on the limits prescribed in IT rules. Okay, now? But if you don't shift out, if you remain in 115 BSc, the exemption available for these special allowances will not be given except for these allowances. For these allowances, even if you follow 115 BSc, exemption will still be available. Traveling allowance, daily allowance and conveyance allowance. Amount spent, to that extent it is exempt, yes or no? It is exempt under the normal provisions also, it is exempt under the 115 BSc also. Please don't forget this, This is very important. And one exemption was available, transport allowance to the handicap employees up to 3,200 per month. Yes or no? That is exempt even if you follow 115 BSc. So these four allowances are exempt under 115 BSc also. But other than these four, children education allowance fully taxable here. Children hostel expenditure allowance fully taxable here. Then do you remember that running or outstation allowance fully taxable here. Tribal area allowance, underground area allowance fully taxable here. Uniform allowance fully taxable here. These four allowances were exempt when you shift out. Then also this is exempt. Others are also exempt. These are exempt. And other than this, others are also exempt. But when you follow 115 BSc, others are not exempt, but you can take the exemption for these allowances. Okay. Now do you remember in IFOS I had told you MP, MLA, MLC, they are getting what? Constituency allowance, daily allowance. So their constituency or daily allowance will be exempt under section 1070. Their salary will be taxable as IFOs, but their daily or constituency allowance will be exempt under 1017. But if you follow 115 BSE, that allowance will not be exempt, that will be now taxable. Yes or no? Do you remember for clubbing, minor child's income used to get clubbed? 1500 rupees per annum per minor child you used to get the exemption. Will not be given if you follow 115 BSE. 10 AA just now we did some time back. 15 years tax holiday. First 5 years 100% export profits, then 50%, then 50%. If you follow 115 BSE, forget about 10 AA. Just tell me which SEZ assessee will leave 10 AA. Bloody forgetting that 10 AA only we have gone there and we are following 115 BSE. Are we mad or what? We are not going to follow 115 BSE. Getting my point? Then do you remember that entertainment allowance which we used to get? Then professional tax deduction which we used to get under the head salary, that will also not be allowed. But remember, standard deduction you are going to get. There you are going to get 50,000. Here you are going to get 75,000. Okay. Another effort to keep you in default tax regime. There you are going to get only 50. Come here. We are going to allow 75. Stay here. Don't shift out. Okay. Then do you remember SOP interest we used to claim up to 30 or sometimes up to 2 lakhs also? That SOP interest will not be allowed. If you follow 115 BSE, only SOP interest will not be allowed. Meaning LOP, DLOP interest was allowed fully. Then also, and under 115 BSE also, LOP, DLOP interest will be fully allowed. Will you remember? Hello? And now, PGBP head. In PGBP head, you used to claim additional depreciation. That additional depreciation will not be allowed. These all things I have told you at correct places. We are just, looking at these things right now. We are consolidating. That these things were scattered everywhere. We are consolidating at one place. So now you will see here and then you will start solving the questions. You will come to know, okay, 115 BSE followed. This I am supposed to take. This I am not supposed to take. Yes or no? Then do you remember that donation for scientific research, etc., which was available under section 35? That you are not going. See, additional depreciation you are not going to get, but normal depreciation you are going to get. Under section 35, donations you are not going to get, but the expenditure for scientific research, revenue or capital expenditure, that you are still going to get. Hello, sir. So, expenditure incurred will still be available, but the donations made for scientific research, etc., will not be available as a deduction. Then 35D, specified business, capital expenditure you used to claim. The cost of entire cost of asset, you used to claim as a deduction, other than land, goodwill and financial instruments. Yes or no? That is not going to be available under 115 BSE. Just imagine any specified business, any assessee doing specified business would have started doing that business because of that deduction only, no? Will he forget that deduction and come under 115 BSE? Nobody is going to come here. And see, family pension which you used to get, IFOS, 1/3 of family pension or 15,000, whichever is lower, you used to get a standard deduction to the extent of maximum 15,000. They are telling you, go, take 25,000 standard deduction. But stay here. And remember, no deductions under chapter 6A will be available except these three deductions. 80CCD2, employer's contribution to NPS, first taxable, claim under 80CCD2 up to maximum 14%. You are following 115 BSE. But if you don't follow 115 BSE, up to 10% only. Yes or no? Of your salary. Then 80CCH2, employer's contribution, government's contribution to Agniveer Corpus Fund. Fully allowed. First taxable as your salary, then fully allowed under 80CCH2. Allowed here also. Then 80JJAA, additional employee cost, 30% of that for 3 consecutive years. Allowed there also, allowed here also. Other than these 3 deductions, you cannot claim any other chapter 6 deduction. All the chapter 6 deductions are gone. Okay. Now you have to remember each and every deductions and exemption which is given in this list. If you forget any of these, you are going to commit mistake. And these are very easy to remember, no? Because we have solved questions also. In the questions also we are able to identify this. Okay, no? Sure? Now, see what they are saying. When you claim interest on SOP, will it be allowed or it will not be allowed? Not allowed. Interest on LOP, DLOP will be allowed. And don't you think because of this interest deduction under LOP or DLOP, there will be a loss? Now what if that loss is not getting set off within the head? Now what you will do? There will be a house property loss, and now house property loss will not be because of SOP, because SOP interest is not allowed only. Now the house property loss will be because of full amount of interest is allowed for LOP and DLOP, yes or no? And because of this full amount of interest deduction for LOP, DLOP, there will be a loss of house property head, which could not be set off within the same head. So now up to 2 lakh, it can be set off against other heads, yes or no? But if you are following 115 BAC, the loss of house property head cannot be set off up to 2 lakhs from any other head, which was allowed under normal tax regime, yes or no? And we have done this thing in set off and carry forward. Now see, because of any of these deductions which you might have claimed in the earlier year, when you were following normal scheme, that time you would have claimed these deductions and exemptions, no? And because of these deductions and exemptions, in any earlier year, there was a loss. And that loss you have carried forward in this year. And in this year, now you are following 115 BSE. Bloody, you are following 115 BSE. These deductions for this year we are not allowing. So the loss because of these deductions happened earlier, which you have brought forward in this year, they will also not be allowed as a set off. Just imagine additional depreciation you had claimed earlier and that remained unabsorbed. Now you are bringing that additional unabsorbed depreciation here. You will not be allowed to set off that unabsorbed depreciation because it is because of additional depreciation. Yes or no? Additional depreciation for this year we are not allowing. Earlier year's additional depreciation resulted into unabsorbed depreciation which you are bringing in this year. So what do you think? We are going to allow you that set off? No. Forget about that. Lapse. Understood? So this is given here. Okay. Brought forward losses or depreciation from any earlier years shall not be allowed to be set off if such loss or depreciation is attributable to any deductions or referred to in point number 1 above. So this loss is because of any of these deductions in earlier years, okay, and that loss is brought forward in this year. In this year, this loss will not be allowed as a set off now. Got it? Now, within how much time you are supposed to shift out? See, default is there. Now, if you don't shift out, default will be applicable. Yes or no? So you have the option to shift out now. So within how much time you have to shift out and how many times you can shift out? Every year, this option will come prior to filing your return. So whenever you are going to file your return every year, you have this option. Check whether you want to stay in 115 BSE or you want to shift out. On or before the due date of filing return, in your return only you are supposed to tell the government that you are shifting out. Okay? Every year. So every year you will have to make that comparison, which is more beneficial, which is more beneficial. We have done that in few questions also. We have solved as per 115 BSE also. We have solved as per normal scheme also. And which is more beneficial, we have given that advice also. If 115 BSE is not better, we follow normal tax regime, meaning we shift out because the total income is less and the tax liability is also less. Yes or no? So this you can do every year. Every year you can do. Every year you can shift out. Now for example, this year you followed 115 BSE. So next year if you want to shift out, you can shift out. Or for example, this year you have shifted out. So that does not mean that next year you are not going to get this option. Next year again 115 BSE will become default. And next year if you want to shift out, next year again you can shift out. Or next year if you want to stay in 115 BSE, you can stay in 115 BSE also. Getting my point? But there is a very big drawback. This option to shift out and remain in 115 BSE every year is available only if you are not having PGBP income. But if you are having PGBP option, PGBP income, then you have to every year shift out. If you don't want to fall in 115 BSE trap, you have to every year shift out. The year in which you don't shift out, you are earning PGBP income. And the year in which you don't shift out, from that year 115 BSE will stick to you every year. Now later on you are not going to get this option to shift out. Now forget about 115 BSE, in a single year you are gone. Forget about shifting out, you are gone. 115 BSE will stick to you forever, till the time you don't stop earning PGBP income. Now 115 BSE will be applicable. So option to shift out you have to take every year if you are earning PGBP income. If you don't take that option to shift out every year, that means you are following 115 BSE. And the year in which you have followed 115 BSE, from that year onwards, you stop getting this option. Okay? This is 115 BSE if you follow, if you are earning PGBP income. But if you are not earning PGBP income, see, this year you followed 115 BSE now. Next year also followed. After 2 years, you want to shift out? Go shift out, no problem. 115 BSE will not stick to you. Getting my point? See, Madam Nirmala Sitharaman, you are not following this, no? Optional, no? See, now we have made it default also. And once you forget to shift out and you are earning PGBP income, this will stick to you forever. Now, if you want to shift out, you will have to stop earning PGBP income. This is made from 2020, last year only, because since last year only this scheme has been made default, no? Okay. Earlier, this option was available every time. Okay. In every case. But last year onwards, this is compulsory now. Got it? So, this was your 115 BAC, my dear friends. Okay. So, this entire thing was easy for you. Just imagine, this entire thing is given by the ICI in the first chapter, in the module. And if you will pick up the module and start studying from ICI study module, in the first chapter only, you will faint. Because you are not going to understand these things till the time you are not, completing all the things, just like the way in which we have done. Okay. So this was your 115 BSE, which is over. Okay. Now let's come to the exemption part. Exemption chapter, there is one exempt income topic. Okay, no? See, actually this is not a topic. All these exemptions which are written here, no? I have completed all these exemptions. Did I tell you gratuity exemption? Where it is given? Section 1010. So this is all section 10 incomes. So all the section 10 incomes under different subsections, all these incomes we have covered at proper places. For example, 10.1, agricultural income is there. Did we complete the agricultural income topic? In that topic only this exemption is covered. Which income will be treated as agriculture income? 2.1a. That 2.1a income which is given in section 2.1a is agriculture income, and that 2.1a income will be exempt under 10.1. Hello, that is agriculture income which you can exempt. Then 10.2, share of profit received by the member from HUF, fully exempt in the hands of member. Share of profit received by a partner from the partnership firm, that share of profit will be fully exempt in the hands of partner. Because on that entire profit, the firm or the HUF would have paid tax, and out of that tax paid profits, you are getting your share. You should not pay tax on this amount again, because that is already out of the tax paid profits. No, firm has paid tax on the profits, HUF has paid tax on the profits. So whatever tax which was supposed to be paid on the profits is paid. Now out of that profit, you are getting your share as a partner or as a member. That should not be treated as your taxable income, because if we consider that as your taxable income, one income is getting taxed twice, once in the hands of partnership firm HUF and second in the hands of partner or member. So exempt that share of profit. This I have already explained. See, besides every section, no, in green color I have written something. That is the name of the chapter. If we have finished those chapters, no, 100% I have finished those exemptions also. Because in those chapters, I have definitely discussed these sections at proper places only. 10.1, 10.2, 10.2a already done. I have to just discuss 10.4 and 10.6 with you now. 10.4 and 10.6. I would have discussed 10.4 with IFOS. See, this I could have covered in IFOS, but I forgot to cover there. Hence, I am separately covering. IFOS, do you remember interest point we have done? Interest. Some interest is fully exempt under 10 subsection 15. Those we have done, no. So, there is one more interest which is exempt under 10 subsection 4. I should have covered this with IFOS only. So, you have IFOS notes, no? With IFOS notes, you have already done 10.15, no? So with 10.15, go and write 10.4 also along with that, which I am explaining right now. So this 10.4 for this section also, you are not supposed to come here. Whenever you sit and revise, this interest is already covered by IFOS, that interest part. In that interest part only this will be covered. Getting my point? Now, have you covered salary head? Sometimes the salary is taxable. No, always whatever salary you are receiving for services rendered in India, that is taxable. No, but sometimes even if you render services in India, for those services, even if you receive salary, that salary is exempt in some cases. Those are given in 10.6. I should have covered this under the head salary, but I forgot to cover at that time. So now I will be covering separately. But remember one thing, whenever you will read 10.4, read it with interest under the head IFOS. Okay. Whenever you will read 10.6, read it with salary head. Getting my point? And 10.10 BC, compensation. Do you remember compensation on disaster? We were doing IFOS chapter. In IFOS chapter, there was one small illustration. IFOS chapter we have completed. Compensation on disaster. Some disaster happening. Cloud burst happening. Some, aeroplane got crashed. I gave you these two examples also at that time. So, people will lose their lives. They will become handicapped. So, they are usually going to get compensation from the government or compensation from the local authorities. So, any compensation received or receivable on what? Disaster from the government or local authority, fully exempt. 10.10 BC. This already I have told you under the head IFOS only. While solving the questions, one illustration was this. Okay. So this I am not going to discuss. This already done. Okay, no. Now I am going to discuss these 2 points. But remember 10.11a, can you see a star mark? This also I have discussed. Sukanya Samriddhi scheme. Any interest you get, fully exempt, no? So this along with interest I have covered this. Now you just have to cover this interest in IFOS. That's it. Okay. Now whenever you are going to get some lump sum from Sukanya Samriddhi account, that lump sum also gets exempt under the same section 10.11a. Okay. 10AA we have just completed. Now 10AA I wrote many things, but that was in rough, no? So the entire fair presentation of 10AA is given here. See, The entire 10AA is in front of you on your screen. This is 10AA. This I have discussed with you today itself. Only do this much in 10AA. If you by mistakenly, if you are touching the ICI study mat for 10AA, you will go mad. 10AA essays are written on that. Stories are written. No need to study all those things. Read only this much is sufficient. Okay. So now how many sections we are supposed to cover in this section, in this chapter? See, many of the sections I have covered in salary. Many of the sections I have covered in IFOS. Few of them I have covered with PGBP. Few I have covered in capital gains. Few I have done while doing your deductions chapter 6A. Do you remember 80CCD, NPS account closed? So on the closure, whatever amount which was receivable, 60% of that will be exempt, 1012A. If you are an employee, not closing your NPS account, but you are withdrawing partial, you are making a partial withdrawal from your NPS account. So up to 25% of the amounts contributed by you, contributions by the employee, so far 25% of that, to that extent partial withdrawal will be exempt, 1012B. But 1012B exemption will be available only to the assessees who are employees but not self-employed. Getting my point? I have already discussed all these things. So now this already done in IFOS, this already done in IFOS, this I have just now covered. I am supposed to discuss 1, 2 and 3 sections and the chapter will be over. Okay. Ready? First section 10.4. Please pay attention. This is 10.4 and it is over. Only this much. See. Read only this much and 10.4 is over. How good this section is, no? I should have covered it with IFOS only. But I forgot. Next batch onwards I will cover in IFOS only. But while reading IFOS, you cover this interest with IFOS only. Okay, no? Now, do you know what is NRE account? NRE, non-resident external account. See, usually the Indians who are staying outside, out of India, they are permitted to open this kind of account in a bank. Or any person who is having a special permission from the RBI to open this kind of account. So either a person resident outside India. Do you know non-resident as per Income Tax Act? So in Income Tax Act, there is a concept of non-resident and resident. Just like Income Tax Act, there is another act known as Foreign Exchange Management Act, FEMA. So in the Foreign Exchange Management Act, there is the same concept of resident, non-resident, but there the residents are known as person resident in India, PRI, and the non-residents are known as person resident outside India, PROI. Getting my point? So as per the Foreign Exchange Management Act, see, conditions are also same over there. 182 days condition is there. Okay, no? So if you are a person resident outside India as per FEMA, or you are such a person to whom the RBI has given the approval to open this NRE account, only these type of people can open NRE account. Now in your NRE account, what you do, you earn in foreign country in foreign currency. And that foreign currency amount you deposit in this NRE account. So account is in India. But from outside India, in this account, you are depositing foreign currency. Just imagine how good you are for the government. You are sending foreign currency in this account. This is increasing the foreign currency reserves of the government. And just imagine, if you withdraw that money, foreign currency will go away, no? So the government wants you to keep your foreign currency in this account only. So the government wants to give you some benefit. Till the time you are not going to get any benefit out of this account, no. You will always think of taking out money. So put your foreign exchange in this account. Whatever amount which is standing to the credit of this account, whatever amount which is there in the balance, there in that account, on that balance, whatever interest you are getting, that interest is fully exempt. 10 subsection 4. Don't remember the clause, no need to remember. 10.4. As per 10.4, that entire interest will be exempt. Just imagine if the amount remains deposited over there, your money is safe. And that is giving you interest also. Compared to other investments, a little bit more interest is given here. And if that interest is coming and that interest is also exempt, you will think, no, let my money stay there only. My money is safe. It is not at risk. If I would take that money out and invest it somewhere, it will be at risk. So my money is safe also because it is lying in the bank. Okay. And on that money, I'm getting a little bit more interest also as compared to other accounts. And that entire interest is exempt only. Let my money be there only in that account. So you'll be motivated to keep your money deposited here, meaning keep your foreign exchange here only if you are given the exemption for this interest. So if you are an individual who is a person resident outside India or who has been given a special permission by the RBI to open a NRE account with any bank. So open that NRE account, whatever amount you have deposited in this NRE account, amount remaining to the credit of this account, on that amount, whatever interest the bank is giving you, that entire interest will be fully exempt. 10.4 done. Now coming to 10.6. Under section 10 subsection 6, there are 4 types of salaries. Wait. This salary for services rendered in India, deemed to accrue or arise in India, Indian income, still exempt. Wait. This salary is also for services rendered in India, deemed to accrue or arise in India, Indian income, still fully exempt. This salary is also for services rendered in India, deemed to accrue or arise in India, Indian income, still it is fully exempt. And here also, whatever salary you are receiving is for services rendered in India, deemed to accrue or arise in India, Indian income, still it is fully exempt. In these 4 cases, even if the salary is received for rendering services in India, even if it is Indian income, even if it is deemed to accrue or arise in India, even if it is Indian income, still it will be fully exempt. Provided few conditions we are putting, few conditions you fulfill. Okay. So first one, do you know this is USA, or you can say Canada, or you can say United Kingdom. You can say any foreign country. I have just given few examples. You can take any example you want. Let us take the example of USA. Okay. And this is India. India will have an embassy in US. Likewise, US will also have embassy in India. Yes or no? Embassy can be there, consulate office can be there, high commission office can be there. Yes or no? Commission, high commission, embassy, legation, consulate office. It can be any type of. See, these offices are usually the contact between 2 countries. If I want to convey anything, if India wants to convey anything to US, no, it will convey through this embassy, US embassy in India. And if US wants to convey something to India, it is not embassy, but it is like, high commission, or it is consulate office. Consulate office is nothing but it is a licensing office between 2 foreign countries. So there is an embassy or consulate office in USA. This is Indian embassy. Sir, if it is in USA, then it has to be US embassy. No. Ayo. US embassy should be in India and Indian embassy should be in US. Okay. Now let us not talk about this Indian embassy in US. In India, will there be a US embassy? Now don't you think foreign diplomats will come to work here? Those are foreign countries citizens of that country, and that country has engaged them as their employees, who are going to work in these embassies, high commission, consulate offices in India. So we call them foreign diplomats in India. Are they going to come for their country? Where are they staying? In India. As an employee to their government, they will be providing their services in India. And for those services, are they going to get any salary in India? Is it their Indian income? Fully exempt. 10 subsection 6. Wait. When these foreign diplomats will come now, foreign diplomats, so the employees who will be working in embassies, high commission, consulate, also, etc., they will be known as foreign diplomats. When they will be coming now, so to help them, they will bring their staff member also. So they will have their staff members also who will be working with them in this embassy. These foreign diplomats are high class employees, very high category employees. They directly communicate with the ministers, prime ministers and all. So they are very top class employees. They are not doing all the execution job and all. So to work for them, they will be given some staff also. So their staff also they are bringing from outside India. So don't you think their staff is also foreign citizen? They are also going to come and they are also going to render their services in India. Hello. So they are also going to get the salary from the same government, no? For rendering their services in India. Their salary is also Indian income. So whenever these foreign diplomats or their staff members are coming, they are rendering their services in India. Okay, for rendering their services, they are going to get what? They are going to get salary. Okay. So their salary which they are getting in India will be their Indian income only. But we are not going to charge that under the Income Tax Act, that is fully exempt. But one condition, and that condition is very important. India will also have embassy in your country. So just like your foreign diplomats and staff member your country is sending, India is also supposed to send foreign diplomats and staff member to US. Now just imagine, Indian diplomats and their staff member will earn salary over there. So their salary should be exempt there. Only then your salary will be exempt here. Tit for tat. If your country is not giving any exemption for the salary of our diplomats and their staff member, then your salary and your staff member salary will also be taxable in India. Then no exemption will be given. Getting my point, everyone? And remember one thing, why are you coming to India? To represent your country. Okay, no? Other than that, if you will get engaged into any other business, profession or vocation in India, then also this salary will not exempt. So you are not going to get engaged in any other business, profession or vocation in India. Only then your salary will be exempt. Salary of you and your staff members. See, there will be some local staff members also who will be employed in US Embassy. Their salary is not exempt, huh? Their salary is not exempt. The salary of those staff members who are coming with them, who are the foreign nationals. Getting my point? So, this was your point number 1. Please pay attention. See here. Remuneration. Remuneration means salary received by an individual who is not a citizen of India, non-citizen. not a citizen of India, individual who is not a citizen of India, he is getting this remuneration for services as an official of an embassy, high commission, legation, commission, consulate or trade representation of a foreign state, meaning in short foreign diplomat, or any member of the staff of any of these officials is exempt. So remuneration received by these foreign diplomats and their staff members is exempt. Condition: the remuneration received by our corresponding government officials and their staff members is also getting exempt in your country, then your salary we are going to exempt and your staff salary we are going to exempt. Yes or no? And the above mentioned members should not be engaged in any business, profession or employment in India. Getting my point? If these two conditions are fulfilled, your remuneration will be exempt. Got it, sir? So, can I say, in short, salary of foreign diplomats and their staff members will be exempt in India. You just have to remember the conditions. That's it. Okay? Now, you are the employee of you are a foreign national and you are the employee of a foreign enterprise. Again, see, you are a foreign national means you are not a citizen of India. Foreign national means not a citizen of India. But now you are not the foreign diplomat, you are the employee of any foreign enterprise. And the foreign enterprise of which you are the employee, that foreign enterprise is not engaged in any business or trade. So you are not the employee of Microsoft, because Microsoft is a foreign enterprise engaged in any business or trade. No, you should not be the employee of that foreign enterprise who is engaged in any business or trade. Meaning, you can be an employee of foreign NGO. Foreign NGO not doing any business or profession, no, not doing any business, not doing any trade. UNICEF, United Nations Organization, all are these foreign enterprises. Are they engaged in any business or trade? No. So such type of foreign enterprise, you are the employee of that foreign enterprise. And that foreign enterprise has sent you to India for doing some work. So will you render your services to your employer in India? Yes. And for that, are you going to get salary? Fully exempt, provided your stay in India should not be more than 90 days. And the foreign enterprise of which you are the employee, the income of that foreign enterprise is assessed in India, and from the income of your employer, we have not allowed your salary as a deduction. So if your employer, foreign enterprise, is assessed in India, meaning his income, his total income is also taxable in India. Your employer, foreign enterprise, the total income of that foreign enterprise is taxable in India. But while calculating the total income, your salary was given as a deduction to your foreign enterprise. Yes or no? Then it will not be exempt. Then it will be taxable. Understanding? And your stay should not be more than 90 days in India during that previous year. Understood? Sure. So this is the second type of salary. If you will see this type of salary and if you will charge this salary under the head salary, you are gone. Remember, while calculating the salary head income, these type of salaries should not be taxable because you are getting the exemption. Okay, sir? Sure. Now next one. Now the salary received by a non-citizen. Non-citizen who is also a non-resident. See, this requirement of being a non-resident was not there in the earlier 2 points. Earlier 2 points, only non-citizen, only a foreign national. This word was written. Can you see? Here it was written non-citizen. Here it was written foreign national. Residential status was not important. So whatever may be the residential status, this exemption was available. But in the third point, if you want to claim this salary as exempt, then first this salary should be received by a non-citizen who is also a non-resident in India. Your residential status should also be non-resident. Then your salary we are going to exempt. Which salary, which you might have earned while you have come on a foreign ship as a crew member in India and which you have rendered on that ship. Do you remember Indian citizen living outside India on an Indian ship as a crew member? So don't you think some foreign citizen on a foreign ship can come to India also? So foreign citizen as a crew member coming on a foreign ship to India. Now will he get salary? Yes. So while his ship is in India, he is rendering services while the ship is in India. So the services are rendered in India. So during that period, whatever salary he is going to get will become his Indian income? No. Will be taxable? No. Will be fully exempt provided his stay in India is not more than 90 days. Got it, sir? Now you are the employee of a foreign government. Now see, they are not telling you that what should be your residential status. Your residential status can be anything. Okay, no? Your residential status can be anything, but you are the employee of a foreign government. Now that foreign government has sent you to India to stay here, to take training in India. Happens, no? Sometimes Indian government send their employees outside India to take employment, to take the training in some government departments of foreign country. Sometimes that foreign country will send their employees to India to take the training in the government departments of India. So this is exchange of what? Human resource, exchange of ideas, exchange of training and all. If some foreign government employee is coming to India to take his training, so while he will be on training, he will be paid salary also, fully exempt, provided he is coming to India for a training in these places. Any establishment, office, or in any undertaking which is owned by government or a government company or a subsidiary of this government company, any statutory corporation, or any registered society which is financed by the government. So, are you an employee of foreign government? Yes. Have you come to India for your training? Yes. So, where you are taking your training? You are taking your training at any of these places. Offices, undertakings, establishments of government, or any government company, or any subsidiary of that government company, or any registered society which is financed by the government, or any statutory corporation like LIC and all. Getting my point? Those are all known as statutory corporations. So if you are taking your training at any of these places, and for taking this training here, you have to come to India, stay here, take the training, and while you are on training, you are getting the salary also. It is as good as salary received for rendering services in India. Will be fully exempt because you are taking your training at these places. Got it, sir? Any of these four salaries, if you will see, please don't charge any of these salaries under the salary head. Fully exempt. Will you remember, sir? Should I move ahead? 10-4 done, 10-6 done. Now come to 10-10 BC I have already done, no? 10-10 BC already done. 10-26 AAA. See, this is 10-26 AAA. Now I want all of you to read this. Read it once. We should have been Sikkimis. Hmm? What this section is saying. This section is saying that this section came into effect from 1st April 2008. See, the date is also given. Till that time there was no such section. 1st April 2008. Very old section. Okay. Now it is almost how many years? Almost 25 years. Okay, no? So pay attention. 2028 it will be 20 years. Sorry, 2028 it will be 20 years. So this is very old section. In 1st April 2008 this section came into effect. Now what the government is saying, that if you are a Sikkimese individual, no, see 1026 triple A, this section says that if you are a Sikkimese individual, I am a Gujarati individual, you all are Tamilians, then Kannada, then Telugu, because we are born in such a state, and because of our birth in this state we get the recognition of the state. Okay, no? So if you are born in Sikkim, you are a Sikkimese individual, you have residence proof of Sikkim and all, meaning your ancestors have been staying there, your house is there, you have been staying there, you are born there in any Sikkimese family, so you are a Sikkimese individual. Okay, no? Being a Sikkimese individual, we are going to give you some benefits. What benefit, you know? You can earn income from any source. From business you will earn fully exempt. From house property you will earn rent fully exempt. Oh, you are having a land, rented the land, you are earning what? Rental income from land, fully exempt. You are having a bank account, in that bank account whatever interest is coming, fully exempt. But all these sources of income must be there in Sikkim. So government wants to promote the people of Sikkim to create what? Sources of income in the state. Because this was the state who was taking the revenue from the government. See, whenever the government is earning income, no, central government is earning income. So out of that income, central government distributes money to all the states. Okay, no? So now, the money is going to come from the states only. People of the state earning income. So they are going to pay tax, income tax to the central government, no? So there are central taxes which the government collects. Out of those central taxes which the government collects, those taxes are anyways collected from different states, no? So whatever central taxes the government collects, central government collects, out of that, the government, gives the share to each of the state government. Sikkim also gets the share. But Sikkim does not contribute anything in the revenue of the central government. Very minor part. Because people are not earning only there. Either they are into hunting or they are into growing something. Okay. They're spending their days like, very chilled. So do some activities, bloody. Earn something. Because if you'll earn, there will be sources of income from different sources of income. If you start earning, we can sometime, charge tax, no? But you are not earning only. Start earning. Do something else. There are a lot many things. Do some business. Have some property. Get it on rent. Invest the money somewhere. If you make investment in shares or debentures also, no. So any investment in the debenture or shares, based on that investment, are you going to get interest and dividend? Yes. So entire interest, entire dividend we are going to exempt. Now it is not necessary that the dividend should be coming from the shares of a Sikkimese company only. No. Interest should be coming on the securities of a Sikkimese company. No. You are a Sikkimese individual, invest. You are bloody not doing investments also. No sources of income in your state. And your people of your state also not investing anywhere. So you are not contributing anything to the tax revenue earned by central government. But still you are going to get share. So to promote that people start earning income, even they should know there are other ways to earn incomes. Earn income from There are different sources. Earn. So don't get afraid. We are not going to charge tax. We are going to give you this exemption. First, making them habitual, making them, putting them in a habit that have the habit of earning income from other things also, not just hunting, not just agriculture. There are other ways also in which you can earn income. See, earn income from that. Government is going to give you exemption. So first, trying to show itself that we are good. And later on, after some years, economic activities will start. People will start earning income from different sources. They will forget everything. They will forget hunting. They will forget agriculture. And then everyone is doing different things, earning income, thinking that it will be exempt. After a few years, this will be removed. Understanding long-term planning. But till that time, we should give some benefit. No? Got it? So, only a Sikkimese individual can claim this exemption. See, this is not important for your examination. This is hardly asked. But what if you are that lucky person getting this section in the examination? You should be aware, no? At least once also you have studied this, you will immediately recollect. Ayo, there was something like Sikkimese individual. Yeah, I recollect. Because this is something new and very unique. You can remember also very easily. So any source of income you are having, but that source of income should be in Sikkim. And from that source of income, whatever income you are earning, that income will be fully exempt only if you are a Sikkimese individual. Now understand why this is kept, only Sikkimese individual. We Gujarati Marwadis know, we go everywhere to earn money. If it was written, no, income from any source of income in Sikkim, and they would not have written only Sikkimese individual. In the entire Sikkim, you would have seen Gujarati and Marwadi people, because everyone would have gone there. If we are earning any income from a source in Gujarat, we are earning any income from a source in Rajasthan, we are going to pay tax on that. Forget about it. We will earn income from any source in Sikkim. Income will be fully exempt. Why? Because income from any source in Sikkim is fully exempt. But that is not exempt for everyone. That is exempt only for people of Sikkim. Hello? Now tell me, for Sikkimese individual, all the incomes are exempt? No. If that Sikkimese individual is earning income from any other source which is outside Sikkim, what if that Sikkimese individual has a business in Gujarat and from that business he is earning income? That income will not be exempt because that is not the income from a source in Sikkim. That is an income from a source outside Sikkim. From that, whenever he will earn, that income will be taxable for him. Got it, sir? And any dividend on shares or any interest on securities. It is not necessary that the shares or securities should be of a company in Sikkim only. Hello, sir. It can be any company shares or any company's securities. You buy from that, whatever dividend you are going to get, whatever interest you are going to get, fully exempt. Now just imagine, I am a Gujarati person. I married to a Sikkimese girl. Why, Because dividend and interest income of a Sikkimese individual is fully exempt. I invest a lot in share market. I invest a lot in securities. But if I am investing on my own name, no, or any of my, relatives' name, that entire income is taxable for me. Dividend and interest income. So I am still unmarried. I will marry a Sikkimese girl. Now that Sikkimese girl will come as my wife. She will stay with me. I will keep on investing money on her name. Dividend, interest, fully exempt. Dividend, interest, fully exempt. Dividend, interest, fully exempt. This practice will start, Now no Sikkimese female will marry to a Sikkimese man. Every Sikkimese female will marry to a non-Sikkimese guy. and there anyways people are not having that much money. So people will start giving money also to get married. So wrong practices will start, no? So to stop that, what they have said that with effect from 1st April 2008, we are starting to give this exemption. Earlier, whatever has happened, we cannot change. But on or after 1st April 2008, if any Sikkimese woman gets married to a non-Sikkimese person, yes or no, then that Sikkimese woman is not going to get this exemption. Okay? Otherwise, that bad practice will start. To avoid that thing to happen, they had to stop this. Okay? So marry a Sikkimese guy only. Sikkimese. Both the husband and wife are Sikkimese, earn incomes. But can a Sikkimese boy marry a non-Sikkimese girl? Yes, he can marry. Still his income is exempt. But a non-Sikkimese woman cannot marry a Sikkimese guy, a non-Sikkimese guy. A Sikkimese woman cannot marry a non-Sikkimese guy. If she marries, then whatever income she is earning, for that she is not going to get this exemption. Done, sir. 10, 26, AAA over, and the exemption chapter is over. Okay. So we'll stop the lecture today here, and we are going to meet tomorrow. Tomorrow I'm starting with advanced tax. Initial 1.5 hour advanced tax will be over, and then we are going to start with TDS immediately, and the last topic will be return of income. Okay. So tomorrow and day after tomorrow we are winding up with the syllabus. Sure. So see you. Bye bye.